Welcome to the official Palantir Q1 2024 earnings stream. We are here live today to discuss what's going on in the world of Palantir. This is going to be a very exciting earnings for a variety of reasons. I have a bunch of guests that are joining me in just a couple minutes where we're going to break down what's happening on earnings. We're going to preview what we expect for earnings. And then we will get the numbers in 30 minutes and we will go through the roller coaster of emotions that investors choose to go through because they are willing to put some of their assets into a company and hopefully that company can compound and we can grow our assets. It's going to be one of those exciting days once again. Palantir earnings is always a special time because I think a lot of us believe in this company deeply. I think a lot of us understand that this company has a lot of potential, and it's not just about the money. It's about the progress of if the company can grow against the thesis we all in our own minds have. And then if that is the case, then the stock will eventually reflect that. And every 90 days, we get an update on if the stock reflects that. And today we'll get another update as well. This is going to be fun. This is going to be exciting. Thank you all for being here from the bottom of my heart. This means the absolute world to be joining these streams and spending your time with us, especially because your time is very precious. We have a bunch of people that are joining me here today. Arnie and I are actually in person in DC. We came to one of Palantir's conference that they're going to have in basically tomorrow. And right here, I'm sharing on my screen. Arnie also will just say hi.
Hi, coming soon.
Arnie's going to join from the other computer just so it's just so it's not as noisy. But this was me and Arnie today. We got to look at one of Palantir's demos, their Titan demos. Absolutely incredible. Tomorrow's going to be the real big conference, so it's going to be fun to see how that plays out. Along with Arnie here in DC, I also have from across the world, Mr. Neil, Couch Investor.
Hello. Happy to be here. Good. Apparently, according to your chat, it's your birthday. Or am I being trolled?
No, dude, this chat, like, I don't understand what's wrong with these guys. They troll so hard. They'll say I'm muted when I'm not muted. So I'll be making really specific analysis. They're like, muted. I'm like, am I muted? What's going on? They'll give me a heart attack. And then they'll wish me happy birthday. I'm like 50 years old because I've had 25 birthdays in the past 25 days. So it's not my birthday. No one sent any super chats. No one, thank you all for being here. We appreciate your time. We're going to break down Palantir earnings. Okay, so Neil, let's get started into it. Before we get into the analysis, this stock right now, I don't think any of us expected the stock to be doing what the stock is doing 30 minutes before the print, up 8% on the day, 25.18. We have not seen $25 since March 8th. Raw reaction going into earnings when a stock is up 8%. What do you feel?
Pretty crazy. I did not expect that. I mean, I'm happy I added a little bit last week for the earnings play. I intended to add more today, but then again, the stock just ran up. So I was like, okay, I guess I'll have to live with what I have already right now. But pretty crazy. It's either we pump up even higher because the numbers are so strong and some people know something we don't, or there is a drop. But then again, I mean, if you look at the overall market today, everything is pretty green, other than Robinhood had a pretty roller coaster of a day. Yeah. But yeah, I don't know. It's very interesting to see this strength right before earnings like that, because it's up 25% or so in the last 2 weeks and a half.
That is correct. Yeah, and the other thing about Palantir is that there's 105 million shares that have been traded today in terms of volume. There's about 40 million shares or 50 million shares on average that are traded. So, it's interesting. I mean, obviously, I think a lot of speculators are coming in and saying, hey, Palantir does really well. Let's buy some shares. Then we'll flip them at 27, 28, make a couple bucks. But maybe some of the institutions are thinking, hey, they're going to really crush on their numbers and let's get a position going into earnings. So I guess we'll see. How it plays out. Okay, cool. So let's get into some of the preview we've got going into Palantir earnings. Neil, let me get your initial sort of ideas on the numbers you're looking for. I'm going to pull up their Q4 deck so we can look at some of the metrics from last quarter. But what are the numbers you're the most concerned about going into this print?
Concerned I mean, I would like to see them beat across the board, of course, with all the momentum that they're having, with all the announcements, all the boot camps, all the contracts, partnerships. So I would love them to beat quite heavily, plus raise their full year guidance, which is already quite good, right? 40% year-over-year growth for commercial, I guess. So that's nice. Now, quarter-over-quarter growth, right now the estimates are only at around, I mean, quarter-over-quarter, I'm just talking that, below 2% quarter-over-quarter growth. So that's not that incredible. Year-over-year is probably going to see 20% growth or so. But if they can do more, I mean, we are now expecting more than 20% growth year over year, right? For the overall business. I think that's quite fair.
Yes. Yes.
So yeah, continued execution, commercial is probably going to be very strong. Government side, I do expect to see that reaccelerate this year. They told us that last earnings call. So yeah, let's see if that's already coming to effect right now.
Yeah, I agree. I think the number one thing everyone should care about if you are a Palantir shareholder is the customer count. The customer count ultimately dictates the ability for Palantir to grow top line revenue. Now, the knock against Palantir, which is a reasonable knock, is that they are not growing as much as a traditional software company, which averages 25 to 30%, right? So we've got Palantir here at just under 20%. And as a result of that, the street has said, well, these guys don't grow as much as we need them to grow. And that's one of the issues. The only way they change that is if they grow the customer count, because the customer count influences and trickles down into the revenue. They have 497 customers. The company's planning to do 2.6 billion in revenue. For context, some other companies, software companies doing a little bit more than Palantir in terms of revenue, have thousands of customers because they're targeting all the SMBs of the world. Palantir, a very thick, unique product. They get a client, get them locked in, but they don't get a ton of clients. If that can change, then I think we're going to see something very exciting in terms of Palantir's overall growth. Now, the existential question is, how does that change? How do we get Palantir to actually put up numbers that get that customer count to grow much bigger than it was before? And I believe, as you can see, customer count right here, 35% year over year, last quarter, 44% year over year. For the commercial customer, I believe that's going to be on boot camps. If Palantir can scale the software strategy that Bloomberg did an entire article about a couple of weeks ago in terms of their boot camp strategy, they've done 500 boot camps so far this year. A conversion on that of even 20% adds you another 100 customers, 10%, another 50 customers. And that's not even to take into account all the deals they can give to existing customers on top of getting new customers. So Neil, what is your thesis on the boot camp strategy? We'll talk about buybacks in a second. And how much do you actually expect in terms of customer count conversion?
So with boot camps, I mean, we know that it takes some time until we see that in the earnings report. I don't know exactly how long, but it's not like, oh, they have 500 boot camps going, and then next quarter we already see the positive effects of that. It takes a while, but I mean, the more boot camps you make, even like you said, even if it's only 20%, I mean, 20% could be a very, very big number coming in. If you continue to do 500 every single quarter, maybe you can even scale that up. Maybe like we've seen, maybe some of their bootcamp customers comes in and they make their own bootcamp that can also have Palantir, of course, in the long run. So even at 20%, I do expect some big positive effects. Of course, it's taking 2 quarters, maybe a bit more. I think Arnie has a better number, but yeah, positive growth across the board, more contracts of over 1 million, 5 million. And then, of course, you have government. I think government is still going to be quite overlooked, maybe in the short term, but in the long run, I still expect government to be quite big. I mean, we've seen Andrew with what they're doing right now. It's amazing. And I think Palantir as a software prime, they're going to do quite well, just to start.
I agree. We have some special guests joining us as well that are going to be hosting the stream with us. Hello, sir.
Hello. You have no idea how perfectly clear we hear you from the other room.
Yeah, I think you're going to have to mute when I'm talking. I'm going to have to mute when you're talking. That's the only way we can resolve this, but that's why we're here. Ether Square as well. You guys know him in the Palantir community. He does a lot of good due diligence with finding customers for Palantir. So thanks for being here as well. Ether.
Of course. Pleasure to be here.
Okay, Arnie, what do you expect we're going to get into earnings?
Well, we more than briefly discussed that this morning. And the real expectation is things to accelerate. I think this is the quarter where we could really see like strong evidence of the famous acceleration that we were thinking it could have happened. We saw that gradually happening, but now we have enough months of bootcamps, a lot of deals starting to materialize, which should start actually affecting the numbers in a very positive way. I think the most important thing among the ones that we discussed earlier is the guided revenues are very small, like $614 million for the quarter, and the last quarter it were 608. So just 6 million more for a business momentum like that. That looks like a joke, but that's what will, in my opinion, shape the destiny of this earnings call. Is the bootcamp momentum real? Is the acceleration actually real in terms of revenues? I bet so. What do you think?
I think it is. And Arnie, just make sure you mute because that solves the echo. Yeah, I think it is. I think bootcamp momentum is going to be strong. If you are a Palantir investor and you don't understand the bootcamp strategy yet, basically this is a company that didn't know how to sell 2 years ago. And it was honestly, it's astonishing just watching their journey progress. Karp on the earnings call probably 8 quarters ago is like, we don't know how to sell. We're a product focused team. We're not a sales focused team. The analysts are like, okay, good. You don't know how to sell. We're downgrading your stock, and downgrade. And it was just like, you can't even blame them because it's like, the analysts, they're looking at these numbers and Karp's like, we're focused on product. And then within 12 months, Karp's like, wait a second. And I think, I'm speculating that Karp was really the guy who decided, if product is our moat, if sales and distribution is not our moat, but we need sales and distribution obviously to scale as a company, what if our product sells itself? Now, it's not going to be like a Tesla where you look at the car and then you decide to go buy it. It's not selling itself like that. But what if we could just give the product to people and they could use the product? Me and Arnie are at this Palantir conference, or this AI Expo conference that Palantir has a booth at tomorrow. And as we were talking to some of the Palantir people that are building up this conference, they were like, yeah, people are literally going to be able to use what we built in the demo. And I look around at all these other booths and I'm like, you can't do that at all these other AI companies, but you can do that with Palantir because they don't care about giving you their product because they actually know it's real, it's legit. And then you can pay them later after you like using it. I think if that strategy scales across the enterprise, there is going to be unprecedented growth. Maybe not in this quarter, which is okay. Maybe it's over the next few quarters, but that's what we are excited to see. I want to play one clip that I found that I shared on the Market Open, but I also want to share it right now. Here's Karp back when the stock was $6 talking about how he philosophically thinks about the stock price, and we'll react to this clip and then keep going from there.
A lot of CEOs of technology companies obsess over their share price, and the last year or so, share prices in tech companies have come down. Are you obsessed with your share price, or you don't care that much?
I guess I'm supposed to say
You do care.
I do. Well, I care
You're
because
one of the biggest shareholders, aren't you?
Yeah. Well, look, the answer that I care because the people who work at Palantir care. I do actually care about our shareholders. I actually especially care about the retail shareholders, the small shareholders. But I've been at this 20 years. I know that when we DPO'd with 700, I think, and 40 million in revenue, and during that, roughly in that phase next year, we ended up with $100 billion valuations. As I recently said, I didn't think, luckily I come from a family where I'm at the small table because I'm not an academic. I never thought I was at that good at 45. I don't think I'm that bad at 6. I know how well the company's doing. It's funny, as someone who's been somewhat skeptical of the free market in many ways as a proud progressive and believes that we need to ameliorate the free market by having world-class education and helping people who've been underprivileged. Medium long term, I have enormous faith in our clients, in this case, our shareholders, to figure out if it's working or not. I know we built the product. I built our company as a product that will do very well under these conditions. So I'm obsessed about our company. Do I obsess about the share price every day? No, of course not.
Neil, your reaction to that?
Music to my ears as long-term investors. I think it's music to our ears. A good point on also, his focus on the health of their clients, the clients that they're approaching. It's not small startups they had their SPAC journey, fine, but super, super large companies are starting to use Palantir, have been using Palantir for quite a while, which is a type of security for the business, plus for shareholders as well. He also talked, having a performing, profitable company is definitely something that should be seen positive for the stock market, but also for their customers. Because imagine you're trying to attract the biggest of the biggest, but your company is losing quite a lot of money, has some risk of going under. That's not really a position of strength. Now Palantir is one hell of a position of strength.
Yeah, I would tend to agree. It's also really exciting, because again, when the stock was at $6, I know there's a lot of people here in the chat that I was down lots of money. I'm sure a lot of people are down lots of money, but when you looked at the CEO and how he was thinking about the company, he was thinking, well, we're driving this ship forward. Eventually the street will correct itself. And the street is the street, right? The street is not the company. The street is just trying to dictate how the company should be valued, but the company has to be doing what they need to do in order to grow. And I think that's what we're going to see from Palantir. Arnie, go ahead.
Have you noticed that sentence where Karp said, I'm building the company as a product? What do you think he meant there?
It's an interesting question. I think he meant that if our moat is in product and technology, then if he's building the company with that same culture, a culture of winning in product and technology, all the other aspects of the company should be able to follow, whether it's sales, marketing, finances, etc. Yeah, I would agree. I think that's what Karp's basically kind of trying to point out here, and it's ultimately around the culture of what Palantir looks like. Neil, turn the volume down a little bit on your mic. Yeah, your gain a little bit down, and you should be good there. Let's get into some of these other stats I want to look at. So we talked about customer count. Let's talk about a couple of other things that are interesting. So this slide here, Neil, they had 103 deals last quarter of at least 1 million, 37, 5 million, 21, 10 million. How do you expect Palantir's growth to expand into the small business world, where these are the deals that are crucial in order for them to get the next generation of customers that are not the Fortune 500?
I mean, we've seen an acceleration. I hope the volume is better now. If not, let us know in the chat. I think we've seen an acceleration, right, quarter over quarter. Smaller deals, of course, are maybe, I wouldn't say easier, but quicker attainable than the largest one. So I wouldn't mind continuing to see way more $1 million deals and then grow from there. I also don't know exactly how these deals are structured. If you're starting small, even if it's a large company, and then the 1 million deal becomes a 5 and a 10 and a plus, etc., etc. So yeah, I mean, the story now is continued execution, reacceleration of growth across the board, and I think we'll be quite fine going from there.
Arnie, your thoughts on them scaling down to SMBs to get some more deals?
Okay, sorry. So I think the idea is not Palantir actively seeking to get into smaller clients, but they want to have the product ready to be scalable to smaller clients. What I mean with that is, I think Palantir wants to preserve the focus in using the resources to target the biggest potential clients out there, this both in the government, but more importantly in the commercial side. Once you have the leaders of each industries, then it is easier to scale down to non-leaders, and by definition also to the smaller non-leaders companies. But Palantir, if you think of it as a basket of limited resources, you want to deploy your limited resources into the highest potentially achieving rewards. So that's why I think the focus for Palantir will be always on the biggest customers first, but giving the structure, the opportunity for the channel partner, so the consulting, the Accenture, the Ontologize, like all these third parties, to implement the software and implement the software easier and easier. And I think we are just seeing a small step that bring us into the direction of making the product more accessible, making it open, but not Palantir directly selling to the smaller client.
It's like a trickle-down thing. Like Palantir has a structure. Foundry is available to all the big clients, and then it will naturally organically develop into the other, like smaller and medium companies, like trickle-down.
So basically putting it on a marketplace of some sort, and then whoever wants can use it, and so on and so forth.
Let's talk a little bit about the stock. So we're looking at $25.28. Again, thank you everybody for being here on earnings. Means the world. Alan, thank you for the happy birthday. It's not my birthday, guys, but thank you, Alan, for wishing it. Thomas, the tank, thank you for the $20 super chat. Little thanks from all the amazing work you put in. I feel the community is such a benefit for Palantir investors. It's one of the best ones out there. I mean, I agree. Look, we'll talk more about the community at the end of the call, but the community is the whole reason we do this, and it's the most special part of this journey. I mean, it's just it's a company that has captivated the excitement of the retail investing base. Most of the time, retail investors get a bad rap, and I think this is the one where a lot of retail investors like Arnie, myself, Neil, Ether at $6 were like, no, Wall Street's got this wrong, and that's why it's so special, because Palantir actually is proving that they can really play with the big dogs. And thank you everybody for being here. The stock, Neil, 25.26, up 8%. I mean, it's still running right now. It just hit 25.36. Are you getting kind of nervous that we already got the earnings pump, and that if the numbers aren't amazing, maybe this thing gaps down?
Yeah, so I mean, from a trading standpoint, if you wanted to trade today the earnings, then of course you're probably missing already a couple of percentage points of gains. But from a long-term perspective, now you've got two scenarios, right? You've got one, okay, the stock is up a lot. If the numbers are great and the stock drops, fine by me, right? You can buy more the other day with better numbers. If the numbers are great and the stock goes up even higher, who's going to complain here? So I see this as a win-win situation. I know Vince, I think he's in the chat. He played the options game, has done quite well. Now he's in that scenario where should I take my wins already right now, or should I continue till the end with my earnings play? So yeah, different scenarios, but so far I don't think people can complain. It's definitely more stressful seeing the stock 8% before the earnings. So you're always like, does somebody know anything here?
Right. Arnie, how do you feel about this bad boy pumping 8%?
That weird feeling where you're happy because your portfolio is dramatically increasing, especially when you are almost all in on that. But at the same time, you're not really willing to sell, especially now that the big information is arriving and you have a feeling that the information is set to be good, but still you don't know it. And you know that the more the stock rises, actually the bigger the risk increases of potentially disappoint. So in order to not to disappoint now, the expectation, like the numbers need to be really good. Maybe not only on the actual quarter, like we know it is important, but all the numbers, financially speaking, Palantir's numbers are very related to the past. What happens now starts showing in the numbers in at least a quarter, at least at the very least.
Compounding.
But what really matters now is confidence in the management that they're going to accelerate again. Like we have been discussing this for almost 2 years now. Since the growth started accelerating, we went well below the 30%. We're always, okay, but when Lambo, when growth? And I think with bootcamps, we really put on the key and we are turning it. The door is not completely open, but we start seeing the light. That's my impression. Something you want to add?
I agree 100%. I mean, we will begin to see the results of like months and years of work, and what happens this quarter and the next quarters will have repercussions. As I said, like compounding with a compounding effect in the coming years and decades. I think we'll begin to see the results of the last 2-3 years now.
I mean, so far, what we have been seeing, the explosion of bootcamps. We have seen the explosion of active links. Yeah. And we have seen later the explosion of clients. The only thing that we are not seeing yet is the explosion of revenues. But all this that I spoke about, bootcamps, clients, is actually the precondition to actually have the revenue acceleration. So my gut feeling is maybe it's not this quarter, but it's only a matter of time before we see all of that. Because so far what we have seen is US commercial clients, especially in the US commercial side, are growing very fast, above 50% CAGR, while the revenues are relatively slow. So it's like Palantir is building more capability to capture revenues than collecting actual revenues. But we know that if the clients are good, they expand, they love the product, they will generate more revenues.
I agree. I think it's going to be really exciting to see how this plays out. Again, the customer count is what we're all looking for to see if that top line revenue growth can grow. And if it does, it's going to be exciting to see what happens. Put in the chat. Let's get a poll, or not a poll. We'll just get a bunch of live chats, yes or no. Do we dump or pump on earnings? Let's do that. Do we dump or pump on earnings? What do you think? Dump, yes. Pump, yes. And from this price, from 25.37. Highest volume on a stock today, 115 million. Yeah. It's a lot. The S&P is exploding. Where's the S&P? Also, NVIDIA is up today. Now, Palantir and NVIDIA are not literally correlated, but I mean, NVIDIA is in the AI space. Palantir is AI space. Wow, S&P is up 1%, 516. Palantir 25.22. Coinbase is up 227. Bitcoin struggling a little bit, 63,000. NVIDIA 919. And then you got Palantir here at 25.23. I'm getting a lot of pumps. You know, if Palantir was at 23, it would also be like a big hard. We're probably going to pump. But now at 25.22, the numbers just have to be even better, right? For Wall Street to give us the benefit of the doubt. And I think there's a world where it does do very well in terms of the stock because the numbers are that good. But I also think there's a world maybe the numbers, maybe it already got a little bit ahead of expectations and the numbers don't reflect that. And we'll see. And that's the fun of being an investor and getting to enjoy this journey. We got Garcia in the chat with a big pump. We got pumps. So, Arnie, what do you want Karp to talk about? We got 4 minutes left. What would you like him to say in this call that you as a retail investor care about?
I would personally love to have a comment from Karp into how the world is accelerating into appreciating not only the AI world per se, but Palantir in its unique way of capturing this market. Karp was very pretentious, we can say, in saying, we have no pricing strategy. We will capture the entire market. Cool. What that actually means, like how can you capture a market that is going to be like $1 trillion in 10 years, estimates say. It's like, but what exactly are you going to capture? And I think I really want to have Karp explaining what we understood that we follow the company very closely, that Palantir in AI is not focused into building a model, which is what almost all the companies are doing, trying to build a specific AI agent to solve a specific thing, but the orchestration layer that helps deploy many models, so many AI agents, many AI models to solve use cases. And I think this is like the biggest secret that we know, that we studied the company very closely for long. We have this clear. Palantir is an AI company without models, but the fact that it has no model is not a negative thing, as our Reishi, who has a price target of $5, says. Actually, that's the best thing ever, because all the models can be easily substituted with a click within the AIP platform. There are some demos showing that, but you can't switch from Palantir AIP once you start deploying, once you start having multiple LLMs that automate completely maybe your customer service, maybe you completely automate very annoying but crucial parts of your military operations. You don't say, oh, now, you know what? I'm tired of Palantir AIP. Let's go to another platform. What platform? There are no other platforms. So I think Karp at this moment needs really to explain, educate the broader investor base into why Palantir is an AI company, specifically what kind of differentiator they have among this. Because so far what we have seen is all the hype is on models. Valuation are crazy for models. Palantir is not only profitable, but it is in a superior position to capture this AI market.
I agree. Shout out to TJ, the wheel deal, for the $50 super chat. Really means a lot, TJ. Here's for being the best Palantir research on YouTube. You're like a walking Palantir Wikipedia page. It is disgusting, dude. I knew where the price was for at like $23.90. I like pulled up the date out of my head the other day. I was like, how the fuck? And then I looked at Google. I was like, was I right? I was like, holy shit. I am like, I can actually like re-say the price. That was really cool. But yeah, thank you everybody for being here. Super fun. All right, we've got a minute. We've got a minute till earnings ends. Now, if you're new to the channel, I do a market close every day. And on that market close, just like at the NASDAQ, they ring the bell. I also ring the bell. I'm going to give a fair warning. I have to ring the bell. So for those that are annoyed, in 15 seconds, you can mute the stream. But for those that are ready for a fucking fun Palantir earnings, open your ears, because it is officially 4 p.m. Monday, May 6th. Palantir Q1 2024 earnings are today. All right, now we stare at the screen and hope this thing goes up.
What being an investor means.
All right, so I have, oh my God, we're running. There's a green candle. Okay, let's see. There's green candle. Green candle's up 3%. Green candle's up $26. We have crossed 26. We're back below 26. Now we're red. Now we're green. Now we're green. Now we're red. Now we're red. Now we're green. Red. Okay, now we're red. Now we're dumping. We are dumping down 1%. Now we're not dumping as much. Now we're break even. Now we're dumping. Now we are 1%. If anyone is hiring for an auctioneer job, I am available. Now we're green. Green up 2%. Wow, the street's really trying to figure out these numbers. Let me pull up the numbers to see on my side. If anyone has it, let me know. I don't see it yet on my side yet. Probably will take a couple minutes. Now we're flat, now we're red. Now we're flat, now we're red. Now we're red, now we're red, now we're green. Now we're red, now we're green. Afton, thank you for the $10 super chat. It's not my birthday, but I appreciate it.
We got a tweet.
But I don't know if it's
Adjusted expected EPS $8 versus estimated 7.9 cents. Q1 revenues estimated 615, and the actual numbers is 634.
No. I got it, Arnie. I got it. It's 634, not 615. Okay, so we beat on revenue by 634. So we beat by 15 million. Second quarter revenue, they're expecting 650. Adjusted EPS 8 cents. Is that now we're down 2%? Okay, so initial reaction, the EPS. This is adjusted EPS. I still think the GAAP EPS. I still think is 3 cents. I don't think that's changed. 634 million is a good beat. That's a big beat. 15 million beat. It's not like a 670, 680, but 630 is not bad at all. 630 is not bad at all. We are green after hours. I think this is a world, if I had to call it right now, we're flat to green on this news. These are not crazy numbers. If we were at 23, then we would be at 25, 22, but we literally were up 8% on the day, right? So the numbers are not horrible. Again, let me try to confirm these numbers. We beat on revenue by 15 million, folks. That is not a bad beat at all. So that means I think we're growing 18% year over year instead of the 17%. Now it's up 3%, trying to get to that $26 range. Customer count, yeah, we don't have any of those numbers, guys. We're trying to get the actual numbers. We only have top line revenue and EPS. Let's see.
But de facto, we are accelerating.
It's a solid quarter. I mean, right now these are good numbers.
Yeah, right now these are great numbers. These are not bad by any sense of the imagination at all. So I don't have the real numbers yet. Yeah, see, the reason the stock's flat or struggling, guys, is because we pumped 8% on the day. And so like all the excitement we would have had kind of bottled up right now, if it exploded 8%, basically you got to feel that throughout the day, in my opinion. And that's why if it only pumps 1% or even ends down 1 or 2%, you're still up 5 or 6% on the day, which is not a bad earnings performance, not at all.
I mean, to be fair, a spike of 8% in a day, after results, it would be like an insane result. So the fact that we got it before the earnings is already...
Okay, here we go. We got some real numbers. So let me read them out. Palantir says, our intention is to make our AIP product the most dominant infrastructure in the market. Arnie, can you check if the shareholder letter is out as well while I'm reading this and see if we got that? Adjusted income for the full year, 868 to 880 million. I think they increased the outlook. Oh, revenue guidance. They increased, I believe, to 2.71 billion, if I'm not reading it wrong. Adjusted income for Q2, about 213 million. Q2 revenue, 650 million. Q1 revenue, 634 versus 615. That's good. EPS of 4 cents. They are working to make AIP available to even broader range of organizations and markets that we serve. And they anticipate that U.S. commercial business will remain one of the most significant drivers of our growth in the near term. We already knew that. So that's good that that's happening. Where's the stock right now? Let's see. We're green. We're at 4%. Okay, nice. We're at 4%. Let's see if it holds. But yeah, it's such an interesting. If we did not pump 8% today, we would have been past. I mean, you know, it just would have been a greater move. But the reason it's not as big of a move is because we had a pump in the morning.
Yeah,
hey,
I mean,
this evening we're going to eat.
Yes, we're going to a fine restaurant, Amit.
Yeah. We can get 2 Wendy's $5 biggie bags if we close above 26. Not just one. Shout out to Farzad, good friend of the channel. It's because I joined the stream. Yep, Farzad. This is the reason why we're up right now. What are you guys thinking in the chat? What are you thinking? I mean, I wouldn't mind a $26 close at all. I don't think that'd be bad. 2609. I'm trying to get the actual numbers. Right now.
So this quarter we grew 20% year over year.
How much we did? Let me do the math. We did 608 last quarter, right? So 634 minus 608
is 21%.
Oh no, year over year. A quarter
Year
to
over
quarter.
year. Yeah.
Yeah. Year over year, 21%. Yeah, yes, correct.
Mhm.
2611. Okay, we still don't have the numbers, guys. We're waiting for the actual numbers to come out. It might take a couple minutes.
Wait, I keep it there.
But these are not bad numbers. Not to me. These are not horrible at all. These are. It's not the Nvidia blowout quarter. Again, we think that's a little bit far away.
Okay, so more earnings here because you see.
But it's also not horrible.
So
Adam says it's all good. We are growing and not clowning down. Yeah, that's true. I mean, look, even if we fall 2%, it's still up 7% on the day, right? So it's interesting to see the psychology now behind how the market is going to look at this. Yes, customer count and guidance is going to be part of. Oh, David, we got net income, 106 million. Thank you, David. Numbers are out on CNBC. Oh, I forgot. I pay for a YouTube subscription to YouTube TV, so I should open up CNBC and I should stream this for you guys.
yeah, actually, also the guidance for the earnings, just the earnings increased by like a 30 million, and it starts getting a very interesting number there.
Okay, let's stream these guys. They should have the numbers. Here we go. All right, here we go.
Palantir also raising U.S. commercial revenue guidance in excess of $661 million. That's a growth rate representing at least 45% for the full year. Adjusted income guidance higher to between $868 and $880 million. Now, CEO and co-founder Alex Karp telling me, quote, our idea that we would have software infrastructure that would take you beyond chat seems to be working very, very well. And we haven't given up our policy of sticking up for the West and humiliating enemies of the West. For Q1, U.S. commercial, this was, again, the big bright spot, driven largely by Palantir's artificial intelligence platform, AIP, the boot camps it's been doing for the last couple of quarters. U.S. commercial revenue up 40% year on year to $150 million, was up 14% from Q4. U.S. commercial customer count of 69% year on year, 19% sequentially. The Palantir team telling me use cases that once took months to build using a customer's data, now taking 1 to 5 days. That's leading to faster conversions. In Q1, 136 U.S. commercial deals closed, almost double a year ago. New customers, bigger deals from existing ones. Karp saying this despite a, quote, slow, small, and not the best sales force, sees this as early days of a software LLM AI revolution, also adding that, quote, you have a lot of people kind of repackaging various LLMs. They don't do anything but chat to each other. Enterprises are bored of it. Consultancies are trying to make them useful. It doesn't work because you need an ontology, speaking to Palantir's multi-platforms and different various services and software products. Re-acceleration on the government side as well. That's up 16% year on year. Should continue. Palantir recently winning the U.S. Army Titan contract, which we covered here on Overtime. Ukraine and Israel using Palantir software in the wars. U.S. government still the largest customer. But Karp telling me, quote, I couldn't be more optimistic for the right reasons, like we have the best products, and for the wrong reasons, because China, Russia, Iran are not going to stop acting up. And I think the next 5 years are going to be marked by violence, disruptions, and war. I hope he's wrong. Stocks up fractionally. But again, John, it was...
All right. So what do we got? We're down 3% now. Now we're gap down red. Yeah, now it's down 5%. Again, the pump today, it's interesting, dude. That pump today was not necessarily the best setup going into this call.
Okay, let's sell everything and buy Snowflake.
Yeah, let's go.
Yeah, C3 AI, I think, is better.
C3 AI, yes, let's do it. Do you have the numbers yet, Arnie? Are you getting the numbers?
No, we don't have
No, I
numbers
don't have
yet.
the numbers either. Sorry, guys, we don't have the numbers yet. We are waiting for the deck.
It seems like the issue is light full year guidance.
Yes, and I don't think they can raise that yet because they're still working on the customer conversion, and we don't have that number yet. But once we see that number, we'll see if they're on track. If they're not on track yet, they're going to need a couple quarters to really get that revenue to get there. Where are we at? 24 now, or 23.92. So we were at 20 a couple days ago. So it's still up about 10% in the past week. But again, you know, it went up to 25 today. So if it's down today, obviously sentiment's not going to be the best. That's what we got right now.
Lucid is down 4%.
Lucid's down 4%. Did they have earnings today, Lucid?
Yeah, earnings is a big word for a company like Lucid, but yeah.
Oh boy. Let's see. 23.96. See, the street's struggling with the results right now because it's not like the results are bad by any sense of the imagination, but it pumped today. And I think if we were coming into the day at 22.50 where we ended last week, this thing would be up to $24, right? But we're starting at 25.22. It's just harder to see that keep going. Hims, did Hims have earnings today? Hims, yes. Wow, Hims is up 11%. If you are a Hims shareholder, you are making some money in Hims. Customers increased 47%. Okay, what's the math on that? Hold on. So we don't have the exact numbers, but we can do the math. Let's see if that is correct. Oh, we had last year around this time. Let me pull up. Last year around this time, we had
revenue. Yeah.
Amit, look at Palantir's Twitter. They released a post.
Okay, got it.
Around 6 million in profit. Yeah,
we had 47% on 391. That's the growth. Oh, here we go. Okay, we got. Oh, here we go. We got the results. All right, we got it, folks. We got it. Time to dig in. Here we go. It is time. We're going to be looking at the numbers. All right, so what do we got? Palantir reports revenue growth of 21% year over year. We are above 20%. That's incredible. Not bad. Took a while to get there. We're above 20%. Sixth consecutive quarter of GAAP profitability. GAAP EPS of 4 cents in Q1 2024. I believe it was 3 cents last quarter. So we are getting some more GAAP profitability by 1 cent per share. All right. So sixth consecutive quarter of GAAP profitability, 17% margin, $106 million. I think it was $93 million last quarter or $103 million last quarter. So it's up slightly from that. GAAP income from operations, $81 million. That means the other 30-ish million they got from net interest income, which means the money they have in treasury bonds, collecting about 5.5%. Adjusted EPS of 8 cents. Revenue grew 21% year over year. Commercial revenue, 40% year over year. That's what they guided. Came in line. 14% quarter over quarter to 150 million. U.S. commercial customer count grew 69%. Wow. Holy,
that's an acceleration from 55% last
That's
quarter.
what Carp said the other day, 70% growth.
This is the best 69 I've seen in my life.
We like a 69.
This is the best 69 ever. Incredible. 19% quarter over quarter customer to 262 customers.
That is amazing. That is the best thing ever to see. Like, this is what I like to see in every quarter release. Like, this is the number that I like. Customer account increase. Amazing.
Remaining deal value grew 74% year over year, 14% quarter over quarter. Commercial revenue 27% year over year, 5% quarter over quarter, 299 million. Government. I think that's reacceleration, guys. I think it was 11% last quarter. It's 16% this quarter. There you go. That's a gem. 5%.
But then commercial revenue decelerates a little bit. Last quarter, it grew 32% year over year. So,
correct.
Yeah. On the commercial side, there was that weird base effect from Q4 being a little bit too pumped because the previous year was too weak. And actually, the fact, as we mentioned, the normalized numbers would have been around 40%. So in terms of revenues of US commercial, essentially we keep going very strongly. But with a customer acceleration here, it seems like we have more space to keep growing.
Correct. So we got customer count grew 42% year over year, 11% quarter over quarter. So how many total customers is that, guys? 42% year over year off of 397, I believe. We had 391 last year this time. So that's what, 391, if I'm not doing it wrong, times 0.42 plus 391. We're at 555. That means we added 58 customers. 58 customers, guys. That's the number. 58 customers. Write that down so no one forgets. 58 customers we added this quarter. Stock right now is down 6%. Stock's down 6%. Adjusted income from operations, 226 million, representing a margin of 36%. Sixth consecutive quarter of expanding adjusted operating margins. Rule of 40 score, 57%. That's amazing. That's a particular SaaS metric. That's very important. Cash from they also never included this before. This is the first time they're including this. Wow. Cash from operations, 130 million, 20% margin. Adjusted free cash flow, 149 million. They have 3.9 billion. Last quarter, they had 3.7. So now they have basically 4 billion in the bank in short-term treasuries. Raising full year guidance to 2.67 to 2.689. Not a big raise, but they did raise, which is good. Raising our US commercial revenue to 45%. That's the number. That's a very important number.
So they expect further acceleration.
Yeah, that's where the street might have this wrong. That's where the street might have this wrong. If the biggest part of the business is further accelerating, that will trickle down to the rest of the business. It's not aggressively trickling down yet, but if that continues to accelerate, that's a big deal. Adjusted income from operations, 868 to 880. Free cash flow, 800 to 1 billion. This number did not change. So this number they still believe will be the same. And they continue to be profitable for the rest of the quarters.
Letter is out, Amit.
Letter's out. Okay, let's read the letter.
Also the carp letter there.
Okay, can you guys see this? Let's see. Can you see this? Yes. All right, so I'm going to read this now, guys. Oh, no, this is February 5th, 2024. I need the actual one. English, still February 5th, 2024.
Okay, we can go through the deck first.
Do you have the deck? It's out?
Yep.
Yes, it's out.
Okay, I'll pull it up. Okay, here we go. Thank you, everybody, for being here again. Let's see what we've got in the deck. And I don't have it. Do you have it, Arnie? You might have to share a screen. Oh, do I have it here? No, I don't have it here. Yeah, I still don't have it. I'll go to the stock. We'll look for the deck, and we'll keep seeing what we got. Sounds like overall they had a good quarter. Correct. Sounds like overall they had a pretty fantastic quarter. Down 5%. Yes, it's down 5%. It was at $20 last week, so it's up 10% over the past week. But not a super aggressive drop yet. We'll see what happens. Not a super aggressive move to the upside either. Let's see. They have no debt. Remember, someone says, how much debt do they have? They have no debt. But they do have 3.9 billion in cash. Let me see again, guys. I'm trying to get the actual thing pulled up real quick. Let's see if there's. Okay, here I got a little bit more coverage from CNBC, and then we'll keep going from there as we're trying to get this deck. Here we go.
If you hard refresh, it's up now on the page.
It's up. Let me see. Okay.
Yeah.
Look at the private chat in case.
Financials, quarterly results. I still don't have it. Private chat. Okay, I got it. Here we go. Yep, we're good. Okay, we are getting the official numbers. Q1 2024. Thank you everyone for being here. Let's get into these numbers. Okay, so that's the highlights. We already talked about the highlights. So they start off with a slide about anti-Semitism. Obviously, we know Palantir's stance on what's going on with Israel and Hamas. Last December, we initiated a program for all university students, regardless of background, who have been affected by or concerned about safety on campus. In light of the historical events of hate and anti-Semitism plaguing our universities, we are expanding and extending this fellowship. Time magazine cover. This was super cool to see. The Titan contract in Q1, the U.S. Army awarded Palantir $178 million to deliver Titan next generation deep sensing capability. This was a very big deal that we got, and this happened in February, so that was great. And then let's keep going. AIP boot camps. We'll get back to some of these qualitative stuff in a second. Let's get to the numbers, and then we'll go back to this. Okay, so 40% U.S. commercial revenue growth year over year, 14% U.S. commercial quarter over quarter, 136 commercial deals closed. This number was 103 last quarter. This number was 103. So that's up by 33. 12x 3-year U.S. commercial customer count growth. 74% U.S. commercial remaining deal value, 69% U.S. commercial customer count growth, and then 19% U.S. commercial customer count quarter over quarter. GAAP net income went from 93.5 to 105, so they made about $12 million more. Again, a lot of this is still from, well, not a lot, but it's from net interest income. That's why my reason for not really doing the buyback is that if that money is generating 5% on your cash, that's way better than putting it into buying back the stock right now. So 105 million there. We are GAAP profitable. And again, dude, I mean, interest rates are the highest they've ever been. Most SaaS companies are still not profitable. So to become profitable for 6 quarters in a row, definitely a very, very important thing to see Palantir doing. We achieved GAAP profitability for the 5th consecutive quarter. Our Q1 2024 GAAP operating margin was 13%. That's up 1,200 basis points, and that's probably going to keep growing as the adjusted operating income margins grow. Rule of 40, that's at 57%. We'll talk more about that later. Commercial revenue, 27% year over year, so 236 million to 299. That is down from, I think, 30% last quarter. So overall commercial revenue is down. However, the reason I'm not concerned about that as much as I think the street might be concerned about that is because U.S. commercial is up 40%, which means international commercial is lagging a little bit. That's fine. International commercial, I think they need time to be able to expand that bootcamp go-to-market strategy across the world. So it's not really the biggest deal to me as long as US commercial is not slowing down. In fact, US commercial is accelerating to 45%. So if we're accelerating to 45%, I actually think the streets got it wrong there. And the streets got it wrong many times when they look at the numbers just like that. Under the hood, US commercial seems to be the pivotal part of their business. Government revenue growth, 16%. That is officially an acceleration. US government revenue growth of 12%. I believe that's a slight acceleration as well. 257 million from the US government, 335 million from the overall government sector, up 16%. That was 11% last quarter, if I'm not wrong. That's not bad. NDR, we see Kraft Jan in the chat says 111%. That's also amazing. I didn't get to that metric yet. But for the past few quarters, it was 106, 107. Last quarter, it was 108. We're back to 111, which is very good because we need reacceleration in the net dollar retention. That means our customers are paying more to use Palantir software. And they're continuously using our software, which is good that we're seeing that number get higher as well. Total revenue grew 21% year over year and 4% quarter over quarter, driven by the continued acceleration of our US commercial business. Okay, that's up 21%. Not bad at all. We continue to invest aggressively in AIP in the US while operating leverage at scale. Q1 2024 adjusted operating income margin was 226 million, representing a margin of, oh, wow. This number went up.
This number is crazy.
Go ahead, Arnie. Go ahead.
No, just to say 36% operating margin adjusted clearly means that in terms of free cash flow, so before stock-based compensation, these companies are a printing money machine.
Yeah.
This is a big deal. I did a DCF for this company back in January 2022, and my Super Bowl case, there was a lot of metrics I played with, right? Growth was like at 40%. We're not there. But one of those metrics I remember vividly, adjusted operating income margins in the really big bull case I have for Palantir, that was at 36% for the next decade till 2035 or whatever. So the fact that they're here already, now obviously the street doesn't only care about that. Top line revenue growth has to match up. But I mean, this is, again, the street's going to ignore this. The street's going to ignore that we were at 17%. It's not on the slide, but in Q3 2022, we were at 17%. So about 18 months ago, it's more than doubled to 36%, which means they are figuring out ways how to make their software more efficient at squeezing income out of the final margins they get as they get more clients, and as those clients, and they have to incur costs to be able to deploy that software to their clients, which is aggressive. That's 4% away from 40%.
And look, this also means that it is true that the software sells very organically, because the way you can pump sales is just putting in more sales and marketing. But if you can actually grow without spending that much, it means that you are always having this option open of, okay, you know what? This stuff really works. This digital marketing channel works. Let's deploy a lot of resources there. But once you have like a very high margin, you can deploy that to convert sales and marketing into revenues, essentially leveraging something that works. Where you don't really want to be is where your entire growth comes from sales and marketing, because it means that essentially the product is not that strong.
Correct. And I think that's a point that might go over people's head, but you don't want your growth coming from sales and marketing. You want it to come organically, and adjusted operating income margins also helps to make sure that growth continues to be organic. US commercial customer count 69% year over year. I'll go to the stock real quick. Stock is down. We got a company that's down after earnings. Stock is at 9% down, 22.84. Look, I think the street's digesting these numbers and they probably don't like the top line revenue growth. One thing that's really important, I think, to understand about this is that at 24.25, obviously Palantir was trading at a bit of a premium given the growth was below 20%. A lot of things I'm seeing in the numbers, and if you've been a long-term investor, these numbers are pretty damn fantastic in the context of how things are changing. We are above 20% growth. So now we're in 20% range. We want to get to 25, but the fact that we're above 20% is important. Adjusted operating margins have more than doubled in 18 months. That's incredible. We have $200 million more in cash, $3.9 billion. And we are raising guidance on our US commercial growth, which is the biggest part of the business. So this is a stock price at $23.05 that we had 2 weeks ago. And 5 days ago, it was at $20, right? So it's like, I think the stock, there's a lot of psychology. People can get caught up in the stock, but if you're looking at the numbers for real, and I know the stock is the stock and people want to obsess about that, but like the numbers for real, I'm not seeing numbers that I hate. US commercial or overall commercial revenue decline a little bit. That was deaccelerating, but that's because of the international commercial revenue not really catching up. But overall, I don't think I see numbers that are huge red flags to me right now. Neil, thoughts on customer count on this slide?
I mean, like you said, it's going into the right direction, whether the street likes it or not. I think, yeah, I mean, if we look at the stocks, purely the stocks movement, maybe a lot of it was already baked in. That's why the market isn't green or as bullish. But there is still the earnings call, which can change things. But so far, I mean, what's not to like? There is continued growth, reacceleration of growth, also in government. So, I mean, this is a slide. It's true, less deals this quarter than last quarter, all three of them. But I mean, we know.
Well, hold on. They said they closed 136 deals. Hold on, let me go to. Maybe I read it wrong. They said they closed 136. Weird. I think I might have read it wrong. So we have 87 deals here. On the actual 87 deals of at least 1 minute. That is a deacceleration from the 103 deals, but on the actual.
Yeah, on slide 12, it says 136 US commercial deals closed.
Okay. So interesting. So 87 deals were $1 million at least. 27 were 5 million. 15 were 10 million. And on slide 12, we have 136 commercial deals in the US. Interesting. So they had 87 deals in general closed that were in that $1 to $10 million range. And then 136 minus 87, that'll give you the net US commercial deals closed that were probably above that range. And that money has not trickled down yet into the Q1 revenue because those customers aren't paying on a trailing 12 months basis yet. So that revenue should be coming later in the quarter. Or later in the year. 3.9 billion in revenue. Arnie, your thoughts on the cash we have?
Well, this is all potential optionality to boost growth when you find the right channel. Connected to what we were saying before, Palantir has now figured out a way to grow organically while expanding margins. So it's like the perfect combination. You grow more, you spend less, you have a lot of money available, and you are always in the position to push more on marketing. So I think they will try to, like, once they will find the right channel, they will deploy part of this cash. We have no evidence so far that we want to make a buyback, so there was not a round. We discussed it this morning. So also there belongs to parts of options that the company has, and we need to think also how strong it is to say, you know what, we are growing, we are very profitable, and we have absolutely zero risk of going in financial distress. Trust us.
Yeah, it seems like that's what they're signaling here in these numbers. Palantir's down 10%, folks. We got a 10% red day. Again, I just want to put into a little context. I know everyone hates to hear this during this time. The stock is still up year to date 33%. I mean, if this thing ended at 22 on December 31st after being stuck at 16 and it gained 1% here, 5% here, and we had a slow trudge up to $22, I think people would have been ecstatic that we were up 30% in a year, right? That's usually double the S&P. We got our 30% very quick. I want people to remember that. In fact, we got 50% pretty quickly in February because of how the market reacted and how Palantir's earnings were in Q4. So again, to put in context, I know no one wants to hear it, but it's down 10%. It's hard for a stock to pump if it's up 35% year to date. Like, it's just not easy. It's very difficult. I mean, NVIDIA had to have ridiculous numbers just to get their additional pump, and Palantir doesn't have those types of numbers yet. They're just not that big of a company right now.
Well, essentially, the stock is flat today.
Essentially, yeah. I mean, if you look at its top, yes, it's down, but from last week, yes, basically. Over the past 3 months, it's up 13%, and over the past month, it's flat at $23. We have Carp's shareholder letter. I'm going to read that out loud now, and we'll go through that. We have the call in 30 minutes, folks, and then we'll hear from the company themselves. Okay, so here we go. Let's read this here. May 6, 2024, Alex Carp. Our views about the ways in which software could be built and what it was capable of accomplishing for years has been derided as fringe. We were routinely told by investors that building technical infrastructure for the enterprise market, let alone government agencies, was the sunrest and quickest way to run a business into the ground. Many balked at supporting us. Others insisted we should focus on catering the needs of customers, and many more simply would not return our calls. The market, however, has shifted, and quickly. Our business is now growing at a scale and pace that even our most ardent advocates would have been hard-pressed to say was likely or even possible. We generated $634 million in revenue for the first quarter of Q1, representing a 21% increase over the prior year and significantly surpassing the upper end of our guidance. Remember, guidance was at 615, so that's about a $19 million beat. In addition, the profits that we promised would come and that skeptics repeatedly and confidently said were beyond us have now arrived. In the 3 months ending March 31st, 2024, we earned $106 million in the largest quarterly profit in our company's 20-year history. For comparison, we now earn more profit in a single quarter than the amount of revenue we generated in an entire year, a little more than a decade ago. It gives you a little bit of context on how this journey has happened for Karp. I mean, Karp found this company in his dorm room at Stanford. So being able to get to this point, obviously, is a very, very big deal for him. Our central insight and our most foundational commitment is that software products we are building, their strength and sophistication must remain at the center of our entire company. We have been investing in and refining our enterprise software platforms for years, and a growing portion of the American corporate sector is now coming to us, more aware than ever of how significant AI and LLMs will be in reshaping the industries within which they operate. Other companies engage in intricate and elaborate efforts to sell and market their offerings. Their resources are focused on marketing at the expense of actually constructing the software and rebuilding the systems that they hope to sell. We have taken a different approach and are now investing even more heavily in simply letting potential partners use our software in order to decide what works and what does not work for themselves. In the last quarter alone, we conducted more than 660 boot camps. That's more than the Bloomberg article said that they were going to do. With organizations across industries and sectors providing potential partners with an opportunity to test and begin building on our platforms. The enterprises cannot wait for custom solutions to be built, and they are unwilling to invest in software systems that might work someday down the road. They need results now, and we believe that we have the only platform that works. So obviously, Karp being pretty bullish, saying, look, we're the only thing on the market that most people are going to have to end up using. Our revenue last quarter is a reflection of this unbridled and growing demand. In the period ending March 31st, 2024, we generated $150 million in revenue in the U.S. commercial market alone, representing an increase of 40%. And we now expect revenue in the U.S. commercial business to grow 45% or more in 2024 compared to 2023. Again, I think that's a big, big deal. I don't think the street cares that much about that right now, but that's very important for long-term investors to see that healthiest part of their business is reaccelerating. We anticipate that our U.S. commercial business, which accounted for 24% of revenue last quarter, will remain one of the most significant drivers of our growth in the near term. It is anything but inevitable that our most compelling discoveries as a culture will find useful commercial and industrial applications. The software platforms we have built make possible quantifiable and transformative results for the enterprise. Our partners need the right software infrastructure, the underlying technical architecture that is a precondition for effectively enabling write-back functions, data lineage tracking, large language models, and more generally, the handoff between human and algorithmic agents in order to make AI work. Our intention is to make our AIP platform the most dominant infrastructure in the market and power the effective deployment of AI and LLMs across institutions. To that end, we are working to make AIP available to an even broader range of organizations in the market that we serve, including businesses across the United States and abroad, state and local government entities, as well as research scientists and academic institutions across the world. Warfare in this century will continue to be transformed by software. Many fear that the application of AI in the military context, including its potential to make possible more autonomous and indeed self-directed weapon systems. It has been less fashionable, however, to note that software, including the systems that currently enable target selection and mission planning, has become as vital to the elimination of an adversary as it is to protecting the innocent from harm. The platforms in use by our defense and intelligence partners present a very real threat to the survival of our enemies, but those same software systems may also make possible and indeed hasten the beginning of the end of an era of a total and indiscriminate war. Sincerely, Alex Karp. Thoughts? Neil, we'll start with you, then Arnie on that call.
I mean, is some extra information with regards to the boot camps, which I'm sure we're going to get even more information during the call. But I mean, I do think last quarter we got a bit more. Now it's more about mission statement, which of course is fine as well. So yeah, I mean, I understand now looking at the stock being down, people sentiment might change. Fine. But you also have to think from a Wall Street's perspective. If this thing was trading at, what was it, 19 point something times EV to sales, cannot really stay that high for so long unless unless the numbers are suddenly like growing 100% each and every quarter, which of course we're not there, but we're still at 40, 45, at least 45%, which I'll take it. I'll take good numbers. Stock goes down, gives you an opportunity to increase your position.
Yeah, I'm trying to understand right now the stock going down. Arnie, maybe you can shed some light on it. I don't think we've seen any numbers, and in the chat as well. Have you seen any numbers that are like upsetting to you, like genuinely upsetting? I haven't seen any numbers that are genuinely upsetting. I mean, 634 is a pretty decent beat. Arnie, what was your thought on the letter? And then why do you think the stock is down 10% right now?
Well, the letter is very carp. He's very confident. I personally appreciate that now he really underscore what we mentioned. Overall, Palantir wants to have in AI, which is the infrastructure layer to make LLMs useful. That is essentially what Palantir really needs to sell. So also to contextualize, because so far what we have been seeing is a lot of AI maps in terms of, okay, what are the players? And essentially no one of the B2B big players is considering Palantir somewhere in the map. And also the idea of having AI infrastructure doesn't really exist. So in this sense, Palantir needs to sort of create a market that people don't fully realize. In terms of the stock going down, I think it is just the expectations were high and people wanted something more. Probably the something more is on the US government side, in the US commercial side, not because it disappointed, but because there is this number bias that last quarter was 70 and now is 40, which is just the natural progression that we discussed. But if you look at it from an analyst, it looks like, oh, it decelerated. It's like, no, it just continued going in the same way. It was last quarter, the number was a bit anomalous, but the number of clients, which tells us the direction of the future revenues, is actually very positive. So overall, it's just the stock going down, the business delivered, it is accelerating, it is more profitable, which I thought it was already difficult, but it keeps expanding the margins. And they have so much embedded optionality now that they can really boost and support growth for long and accelerating revenue growth.
Yeah, I would tend to agree. David, good stat right here from David. PE ratio is now 104, down from 250. So a little bit higher growth has reduced the PE. So now everyone yelling at us that the PE is too high. It's still high, but not as high as it was before. Yeah, I agree, dude. I'm looking at these numbers again. I agree with Arnie. The expectations, I think, were a bit high going into this, especially as it pumped 8%. And you know, it's so funny, dude. Like, if it didn't pump 8% today, would we be red right now? We would be at what, 23? Maybe we would end at 24. So we'd end a percentage point green or something. And it's like, it's an okay earnings, but at least it's not down 10%. But this is the nature of the market. I know a lot of people bought some $25 call options going into earnings, and this is what happens on earnings, right? If you leave options open through earnings, especially if they're short-term expiration, they might end up not working right if the stock doesn't go in the direction you want it to go. So this morning, I think, gave people a lot of exit liquidity if they wanted to get out of their options or some of their stock that they bought before the results happened. And I think if you get a pump before the results, it's something you want to look into. But that also created so much of an expectation at $25 that maybe it was just going to be hard for it to perform from there. Neil, go ahead.
Yeah, no, I agree. I sent you something in the private chat, a great overview of the quarter from Brad. Does a great job, just to show you that it's a pretty solid quarter, plus even the guidance.
Yeah, shout out to Brad, Stock Market Nerd on Twitter. Usually there's no red was what I'm looking at, right? He does really good breakdowns of these company earnings. And we, as you can see right here, this is a really good breakdown. We beat on revenue, beat on EBITDA estimate, raised annual revenue guide, raised annual EBITDA guide, beats on 3.7%. Next quarter guidance was ahead across the board. I mean, the only thing that's down is commercial revenue in general. And that's a slight percentage growth down because international is not keeping up with US commercial. But outside of that, I don't know. Arnie, I'm sharing your screen now as well.
Well, we already shared it a couple of times, but I think it is worth underscoring again. Probably, the reading I have is that people are disappointed of the 40% growth from US commercial, but because it went down from 70% growth year on year last quarter, but that 70% growth was a kind of anomalous because in the fourth quarter of 2022, which makes the comparison year on year, there was a dip. So the organic growth rate back then was 40%, and we just continued growing there. And if we look at the commercial customers versus the revenues, we just see the natural progression now with the number of customers even accelerating further. And the one, like we got 58 new customers, if I remember correctly, right? So we know that the bootcamps are really working, because we went from getting at most 30 customers a couple of years ago, now 45 in a quarter, 58 this last quarter. So it's like the potential revenues that Palantir can achieve now literally doubled. Now, there is this slide that I wanted to share, because we know that the net dollar retention now is 111%, meaning that the existing customers expanding more or less 11% year on year, which is not great compared with the past, but it is very good compared with the recent past, which shows a reacceleration finally of the net dollar retention. So overall, this is not a great number, because I would personally expect more in terms of net dollar retention, something like at least 115%, 120 ideally. But at least we see the continuation of reacceleration of the existing customers.
I would agree. I think it's always frustrating when the stock doesn't perform the way you want to perform, but in this scenario, dude, I don't think we could have asked the stock to go to $27, $28. These numbers are not officially numbers that are meant for a $27, $28 multiple. It's just not there yet. But it's definitely not numbers that deserve to be below 20, which is why, we have not seen below $20 since February 5th on Palantir. Now we'll see what happens tomorrow. Right now, recovering a little bit. It was down 10%, now down 7%. But I think it would be hard to get this bad boy to like 18, 19, because these numbers just don't justify that unless the entire macro economy takes a bit of a hit. HIMSS is up 10% after hours as well. We're looking at that right now. And so if we consolidate, in this like 21 to 24 range, I don't think it's the worst thing in the world, because that's still up 35% year to date. And it's actually pretty healthy to stay at that range going into the end of the year. So we can make the range for the 30s by 2020, 2025.
Amit, let's say you didn't see the stock moving. What would have been your natural reaction, your expectation on the stock price, given these results and the information so far?
I would have said great earnings, not phenomenal earnings. So I wouldn't go good. I would go great, but I wouldn't go phenomenal. So I'd be in the middle. So then if I see the stock's down 5 or 6%, I'd be like, yeah, makes sense. If it was up 5 or 6%, I'd be like, yeah, that also makes sense. Now, if it was up 20%, that wouldn't make no sense. But if it was down 20%, that also would make no sense, right? As Garcia says, we have crashed to levels we have not seen since 3 days ago. Yeah, I think overall we got some pretty decent numbers, and that's what we wanted to see. Now, Palantir and what they are trying to do in the AI space from an enterprise software perspective, as I'm reading this CEO letter, and again, where Karp's probably going to start off with a monologue that kind of reflects what he's talking about here. But he seems pretty damn confident in his words that there's not a real go-to-market approach other companies have. We've seen other companies try to duplicate Palantir's bootcamp approach, et cetera, in order to be able to try to get the customers that they've been able to get and then lock them into the deals that they've been able to get as well. And if he's right about that, and the numbers aren't fully showing that picture yet, but he's going to be historically correct, the numbers will eventually reflect that. The question is just, will he be right? And that's the risk I think we're all taking on this.
Yeah, that might be a question during the call. When do they expect to see that reflected in the earnings report? Let's see if we get an answer. People shouldn't forget, because we look at the stock, right? $20, $23, $25. It's over $50 billion company right now. You cannot expect them to be going up and up and up relentlessly without the numbers backing it up. The numbers this quarter looks great. Guidance, maybe we were expecting a bit more. I think we're all expecting a bit more in the race. But so far, I mean, they're doing what they should be doing. I will repeat it again and again. I think government is getting overlooked, because those are pretty huge contracts that can happen for Palantir. And as for Chris Snowflake, he's been asking for a comment on Snowflake for a while in the comments. I don't know
What
when
they
they
be asking for.
he just want to get acknowledged that we should be talking about Snowflake. I have a small position in Snowflake. I took it when it crashed, when the new CEO came in. I thought it was sandbagged. I know it's also extremely expensive, but I know Wall Street loves it, so I'm playing it. We'll see what happens.
Yeah, look, I mean, this is, I know, Chris and I, we go back and forth. At the end of the day, yeah, the call's in 15 minutes, guys. This is a big space, and a lot of companies are going to make a lot of money in this space. Palantir, Databricks, Snowflake, Datadog, all these guys, they're all going to make their money. The question is who ends up becoming, the cream of the crop in the space. And I just think that given all, we don't have, there's just a lot of due diligence we've done as a community that expects Palantir to get there, but they're not going to get there overnight. And this is a stock that was $6 not too long ago. That's now at 23. So I think they're definitely heading in the right direction.
Well, the question is, what other company has already in the position to show a very good use case in potentially any vertical where AI has unlocked an immense value? Like Snowflake can't really do that. Maybe they have done something, but the fact that Palantir now is already able to make many AI cons showing the leaders explaining, look, we reduced by 90% here. We became 3x faster, stuff like that. I think they are the only ones actually doing that at scale.
I agree. And maybe Snowflake does, right? We'll see how this all plays out, but that's the fun of investing, because maybe they end up doing it, maybe they don't, but we'll see how it plays out. I don't think anyone in the chat, I'm looking at the chat right here, even Chris, who's, our friendly Palantir bear, I don't think anyone can say these earnings suck, I just don't think anyone can make that argument. And if you can, please let me know. Expectations, maybe we suck compared to the expectations, but I don't think anyone can make the argument these numbers are like a scam, bad numbers, Karp is overly confident for numbers that don't reflect it. I don't know. I don't think you can make an argument like that yet.
I mean, remember our Tesla live stream? We thought it would dump, went up. This time we thought it would pump, went down.
Yeah, and well, the thing about Tesla is it was down 40% year to date. Palantir's up 40% year to date. I mean, that's like, it's not rocket science, right? That's what makes
Tesla's
it very
numbers
hard.
weren't good at all.
And Tesla's numbers were horrible. Let's get, I think someone on CNBC is talking about Palantir. Let's get their thoughts. And
See that.
To help work through this problem without any enormous disruptions. That certainly has yet to be seen. But then on the others, I would say, again, when you think about the themes that make sense long term, the push towards continued deglobalization and the fact that generative AI is going to be a game changer, it tells you where you want to be positioned in the kind of names that are going to make sense long term.
All right, Julian.
Okay, so we have a guy in a suit on CNBC tell us that generative AI is the future. So that's the confirmation bias we need at the end of the day.
So if I saw correctly, from the CNBC title, is like a light guidance. That's the issue, probably.
Yeah.
Yeah, I would agree with that. I think it's light guidance. I think that's the they increased guidance by like 100 million, 200 million, maybe even less than that. So it's not the guidance. The call's in 12 minutes, guys. It's not the type of guidance that seems pretty aggressive, And again, if the stock was at $16, $17, I would agree with everyone if it was still stuck at that range, that's like, what is this, a broken stock or something? The stock's up from 16 in January to 23 right now. So it's hard to say like, oh, well, we deserve another 20, 30%. It's like, I don't know if the market wants to give us that yet. Maybe they will by the end of the year as we get more numbers, but it's only been 5 months into the year. So to be even up 30% year to date within 5 months and to maintain those gains is tough to do. Not just to be able to expand it further from there. Also, one thing is that, they could be sandbagging as well. And if they believe the commercial growth is coming, maybe there's a little bit of sandbagging happening there. The call will be in 11 minutes, guys. We'll be in 11 minutes to do the call.
Did we check the billings and RPO numbers?
No, Arnie, I've added this to stage. If you want to run through some of these, you can. It should be in the appendix, right?
It's,
billings.
26.
Billings is up. Okay, so billings is 625 versus 605, right? Yeah. So that's up year over year. That's up by a couple.
Not much.
Not much, yeah. And it's up quarter-over-quarter by 20 million, up year-over-year by about 22 million. It's not too bad. And then
I personally expected to see some short-term remaining performance obligations to increase more, because that's the number that tells you, especially in the commercial side. So remaining performance obligations typically are referred to commercial deals. They are already already booked revenues, but just need to enter the numbers.
Yeah, which is probably why guidance is weak right now. Because if they did sandbag it hard, which maybe they did, but then we would have seen this on this slide, in my opinion.
Yeah, I agree. I have a question for you guys in regards to some of these numbers that I want your thoughts on. So this this number that we're looking at right here, in terms of Q2 second quarter revenue, Arnie, I think it's slide 2024, or not 2024, number 24, where revenue growth of 649 to 653. So they did 630 this quarter. So it's funny. 2 quarters ago, they did 608 million. They were guiding for 615. They beat by 15 million, right? 19 million, 634. Now they're guiding for 650 off of 634, which implies a 20 million beat. If they beat by 10 million, we're going to do around 660, 665. What are your thoughts on the guidance, Arnie, on slide 24 for Q2? Do you think they're sandbagging there, or how do you think they're thinking of quarter-over-quarter guidance?
Now, I need to check a bit on the numbers, because what's the guidance expected for Q2 in terms of year-on-year growth?
That's a good question. I would have to figure that out. Yeah, I think it would still be 22%. That's what it would look like. Which would be in line with 21%, right? Nothing that crazy. And so that's what we would see. Thank you for the $20 super chat on Dom. How do you think this quarter's results impacts the possibility of S&P inclusion? That's a good question. Neil, what are your thoughts on that?
I mean, we get another shot at it, right? This quarter doesn't change much, other than there are other candidates as well. So let's see. It's great to be included. It impacts the stock. It doesn't really impact the business that much, in my opinion. It's great to be recognized and say we are included, but other than that, from a business perspective, I don't see it changing that much.
Arnie, your thoughts, S&P 500, based on this quarter or based on the current growth?
Well, why Palantir has not already been included in the S&P 500, I think mostly come to the fact that a big chunk of the net income Palantir was generating was coming from net interest for the huge cash pile. And I think the committee, which arbitrarily chooses once you are eligible, they can say, okay, now we are confident into getting you in. They qualitatively assess the business, and probably they were not comfortable into the fact that Palantir was profitable, but a big part was coming from net interest, and they wanted to see further evidence that even without the net interest part, Palantir is profitable. So I think having the operating margin expanding is a further evidence for that. I believe it is only a matter of time.
Sorry, guys, I was muted. Yeah, I agree. I think S&P 500 inclusion is going to be really interesting. And well, I'll give my thoughts on that in a second. Can you guys see if you can find this? Someone says they purchased $9 million of shares this quarter. Let's see if we can find that. I don't know if anyone else sees that number. Let me know if you see that, because that would be interesting if they bought back $9 million worth of stock and they actually did a little bit of a buyback. While we're looking for that, in terms of S&P 500 inclusion, I think the problem with Palantir is they have the lowest institutional ownership out of a majority of the S&P 500 companies, right? So that's where the committee gets a little scared about letting them into the index if the institutional ownership is not up there. That will change as the numbers get better. And then when that changes, they fulfill all the other requirements and they'll be included. It just might not happen by the end of this year. I think we have 2 more chances this year, June and then December. And if not, then 2025, I think, is more likely than not going to happen. We're down 5% right now. We were down about 10%. So a little bit of a recovery here that we're seeing. And yeah, we'll see if we can try to find this $9 million of shares. It's really weird for them to do $9 million. I wouldn't imagine they do such a small number. But if they do, that'd be interesting to see if they get there. Now, we have the call in 5 minutes. We'll see what Karp can say on this call to also potentially change the sentiment after the initial reaction. Usually, I don't know, when a CEO talks, I have not historically seen the stock react to the upside or downside that aggressively unless they say like something really important. So the initial reaction is the initial reaction, and we'll see if Karp can change it. But in 5 minutes, he'll get a chance to speak.
Guys, if I just can underscore a little thing, they guided for operating adjusted income, so essentially the free cash flow for almost 200 for this quarter, and in reality they delivered way more. They delivered 226. So that is the biggest surprise in my eyes, because 36% operating adjusted margin is really massive.
That's incredible. I keep forgetting about that number, dude. 36% is ridiculous, dude. That's fucking, that's insane. That's a pretty damn good number.
And I think it is useless. Like, it is not good to have it keep expanding from here, because it means essentially they're not really able to deploy the cash in a smart way. So it is good they expand the margin, but at this moment, rather than paying dividends in terms of, okay, we keep accumulating cash, it is truly important that they keep acquiring customers. And I think that's why they guided now for the next quarter, so Q2, for 32% operating adjusted margin. So from here, a slight reduction. Maybe they're now pushing into events, stuff like that.
Shout out to Chad. He's a Palantir engineer. He said, "Is Amit just in the other room from Arnie?" Yes, Chad. That's literally how we're doing this. We were going to sit together, but then we thought the microphones would get a little bit too aggressive. Yeah, Arnie. Hey, Arnie. Hold on, let me go full screen on this. This is epic, dude. This is cool. What's up, guys? That's awesome. So right now the stock's recovering a little bit. We are down 4.5%. We were down 8%. Interesting to see a little bit of recovery here. I mean, we'll see what happens on the call, but $24 would make it green from last week, even if it's still red. Neil, what do you think is going to happen on the call?
Well, with Palantir, unfortunately, it's not like other big tech companies where you've got plenty of analysts that can ask a lot of good questions. With Palantir, we usually get the usual suspects, and that's about it. So I hope they can come out and give us a bit more information, and hopefully we get some good questions from analysts to provide us with a little bit more information. Because at the end of the day, an earnings call is only as good as the analyst questions. Other than that, we just have to hope to get more info. But yeah, expecting more information. Maybe about revenue recognition throughout the year, what they're seeing there. Why is there maybe a slowdown, or I don't know. We'll see. And then government.
Yeah, I can confirm we did repurchase stock. Shout out to Palantir's source sending me this on Twitter. Repurchase of common stock. It looks like they spent $9 million. There you go. Repurchase of common stock. $9 million. Interesting. So for everyone complaining about the buyback.
There you go. We started
buybacks, folks. Now we just got to give everyone a dividend and become a value company so Buffett can invest. By the way, Buffett has $200 billion in cash. Someone needs to hit him up. Whoever is watching from Palantir, you guys got to get Buffett's connect and let him know about ontologies. You know?
I mean, a 10% of Palantir would be a smart use of cash.
Yeah, it wouldn't be too bad. All right, so we got this call that's going to start literally in like 30 seconds. Thank you, everybody, again, for being here. The only thing we ask is if you want to follow us on Twitter, everyone's Twitter is in the description. It would mean the world. You don't have to send any super chats, nothing like that. We just value your attention, caring about our content. It means the world to us. So if you can check out our Twitters in the description and like and subscribe, that would mean the world to us. And let's get this show on the road and see what they have to say about earnings. It should be starting in just about 30 seconds, and then we'll begin.
Is there a question you would love to hear from analysts?
I want to know about this Oracle partnership. I really am curious why they partnered with Oracle and what that means for omnichannel sales distribution. And then I want to know about NATO. Government
Good
reaccelerated.
afternoon. I'm Anna Saro
All
from
right, we're
Palantir's
starting.
finance team, and I'd like to welcome you to our first quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We started the year exceedingly strong, with revenue of $634 million, an increase of 21% year over year, driven by the momentum of AIP and our continued strong performance in U.S. commercial. Our results also highlight the growing strength of our U.S. government business and our enduring mission-critical work. The continued interest in AIP is loud and clear in the conversations I'm having across our customer base. We've shared our plans to capture the market with AIP, and our results show that our strategy is not only succeeding, it is accelerating. While still early days, our focus is on building the foundations of a long-term business. We intend to relentlessly continue landing new customers and subsequently expanding those engagements as our products gain traction and have meaningful impact within enterprises. Not only are we increasing the volume of new customers, but I'm pleased with our ability to grow these new customers as well. With regards to landing new customers, we've sustained our high volume of boot camps with over 915 organizations participating to date to meet inbound demand. We are also seeing substantial deal cycle compression. As one example, a leading utility company signed a 7-figure deal just 5 days after completing a boot camp. Another customer immediately signed a paid engagement after just 1 day of their multi-day boot camp, and then converted to a 7-figure deal 3 weeks later. We expect the favorable unit economics and higher throughput to continue to accelerate our business. U.S. commercial is where we're seeing the greatest transformation. While Q1 is seasonally our slowest quarter, AIP adoption by new and existing customers helped drive notable growth in customer acquisition and revenue in our U.S. commercial business. In Q1, we added 41 net new customers in U.S. commercial. Our customer count increased 69% year over year and 19% quarter over quarter, compared to 8% quarter over quarter growth in Q1 2023. Excluding strategic investments, our U.S. commercial revenue soared by 68% year over year and 22% quarter over quarter. New customers span a variety of industries, as AIP's applications seem endless. From the largest independent bottling company in the U.S. to a leading energy and infrastructure company and a multinational airline. In Q1, our U.S. commercial business had customers from 56 of the 74 GICS industries. As we're landing new customers, we're also seeing those customers expanding their work with us. Across my conversations with customers, I'm seeing the recurring theme of them asking me how they can do more, faster with enterprise transformations driven by AIP. We're showing them how they can move their AI strategy beyond chat. Existing customers such as Lowe's, Cleveland Clinic, and General Mills, among others, are realizing the extensive possibilities of AIP within their own enterprises and increasing their scope accordingly. Lowe's accelerated its engagement from a starting point of no AI to utilizing production-level AI for over 1,000 customer service agents, resulting in a 75% reduction in overdue tasks. As one of its directors noted, quote, "We achieved this in just 4 months and onboarded 1,000 users within 3 weeks of rollout." Cleveland Clinic committed to a 10-year expansion deal to deploy more broadly across its hospitals. General Mills expanded the scope of its work further last quarter, as its senior director noted, quote, "We're saving on average about $14 million annually, and it's really only deployed to part of our network as we speak." We're seeing rapid expansions within key customer accounts. For example, a Fortune 500 industrials company signed a 3-year expansion deal, which increased the annual revenue run rate of our work with them nearly 5-fold compared to our initial engagement with them in 2022. A Fortune 100 retail company started a pilot in Q2 2023, expanded to a use case conversion in August, then expanded its work to a $12 million ACV enterprise engagement last quarter. These are just a few examples. More and more customers are expanding their work with us due to AIP and the incredible traction our software has within their organizations. Turning to our US government business, our revenue continued to accelerate last quarter, increasing 8% quarter over quarter versus 3% quarter over quarter in Q4, with our products every day having critical impact on current world events. We see continued demand for Mission Manager and positive reception to First Breakfast. Last quarter, we were honored the US Army awarded Palantir over $178 million to be the sole prime contractor to build a next-generation targeting node under the Titan program. This marks the first time that a software company has won a prime contract for a hardware system and exemplifies Palantir's position as the software prime, opening the door to vast new opportunities. It is with immense reverence that we approach building and maturing our revolutionary capabilities for our warfighters. In our international government business, we are continuing to ramp up the critical work for delivery of the UK NHS Federated Data Platform, as well as providing defense capabilities to allied partners around the world. Looking at our business and its impact broadly, I'm invigorated about the year ahead. We have never had more conviction about AIP and the power of our software, as well as our continued efforts supporting the most critical missions around the globe. I'll now turn it over to Sham.
Thanks, Ryan. The clear signal from AIP bootcamps is that AI is for builders. So many anecdotes and quotes from customers, all reinforcing the same point. They are getting more done in a day or two in AIP than in a quarter or two without. We have pioneered the approach to getting beyond chat and unlocking the value of LLMs in the enterprise, taking inherently unstructured inputs that are flying around the enterprise, be it emails, Slacks, PDFs, images, comments, audio, and turning them into structured actions and outputs. Taking an email from a customer requesting a different product mix and turning it into an actual inventory allocation in the ERP system of record. Taking a health claims denial and programmatically generating the documentation and supporting evidence from the clinical records and contracts. Automating P&C insurance claims processing, and even in government, using vision models to narrow candidate products driving foodborne outbreaks at CDC. And we have started rolling out Build with AIP, a series of developer and builder-oriented tutorials and reference implementations that enable builders to ramp quickly on the primitives and power of AIP in practical examples that unlock every employee at every customer. Our growth is being driven by the incredible dynamism of the US commercial market, and we believe the US government will follow. With this momentum, we have launched builder bootcamps in the US government. The US Army recently issued a memo identifying 2 Palantir systems, AIDP and Army Vantage, as amongst the 5 total platforms approved for builders. The US Army's Artificial Intelligence Integration Center, AI2C, at Carnegie Mellon, leverages these platforms for half of their active projects and recently built an application for the 18th Airborne Corps with OSDK. Our DoD customer recently hosted a hackathon showing the value of the open Joint All-Domain Command and Control, or JADC2 SDK that we have been pioneering. One participant commented, "Nominating targets with Gaia Assist turns a 6-hour workflow into 10 seconds." We continue to invest in Mission Manager and will be extending it to the edge with our Edge X infrastructure and US government. Now customers can use their cloud instance as an integrated development environment for edge platforms, centrally build, test, and continuously deploy and manage multi-vendor Big Tent edge ecosystems. It covers everything from streaming pipelines, OSDK-backed applications, native Gotham applications, and third-party apps. We are excited with our team of rockstar partners to deliver on the U.S. Army's Titan program. This marks the first time a software company has won a hardware contract, firmly establishing the role of the software prime. We believe the core of this software, Target Workbench, will be critical in every cockpit, every vehicle, and every ship. Finally, I'd like to acknowledge the eye-watering work of our service members and our allies in meeting the moment defending against the massive Iranian attack on Israel. The Gotham investments in JADC2 performed excellently, and we're building even more, even faster. I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. Q1 was a strong start to the year. Revenue growth accelerated to 21% year over year in the first quarter, driven by momentum in AIP and our U.S. commercial business, and a re-acceleration in our U.S. government business. We delivered our 6th consecutive quarter of GAAP profitability, generating a record $106 million of GAAP net income in the first quarter. We also delivered our 5th consecutive quarter of GAAP operating profit, generating a record $81 million of GAAP operating income in the quarter. Adjusted operating margin expanded to 36% in the first quarter, continuing to highlight the strong unit economics of our business. The revenue and profitability outperformance drove a 3-point sequential increase to our Rule of 40 score from 54 in the fourth quarter of 2023 to 57 in the first quarter of 2024. This was the 3rd consecutive quarter of an expanding Rule of 40 score. Turning to our global top-line results. We generated $634 million in revenue in the first quarter, up 21% year over year and 4% sequentially, exceeding the high end of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, first quarter revenue grew 24% year over year and 4% sequentially. Customer count grew 42% year over year and 11% sequentially to 554 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $55 million per customer. Now moving to our commercial segment. First quarter commercial revenue grew 27% year over year and 5% sequentially to $299 million. Excluding the impact from strategic commercial contracts, first quarter commercial revenue grew 36% year over year and 4% sequentially. We had a very strong quarter of commercial bookings. First quarter commercial TCV booked was $505 million, representing 187% growth year over year. Our U.S. commercial business continues to see unprecedented demand driven by momentum from AIP. First quarter U.S. commercial revenue grew 40% year over year and 14% sequentially to $150 million, surpassing international commercial revenue for the first time. Excluding revenue from strategic commercial contracts, first quarter U.S. commercial revenue grew 68% year over year and 22% sequentially. AIP is driving both new customer conversions and existing customer expansions in the U.S. In the first quarter, we booked $286 million of U.S. commercial TCV, representing 131% growth year over year. Total remaining deal value in our U.S. commercial business grew 74% year over year and 14% sequentially. Our U.S. commercial customer count grew to 262 customers, reflecting 69% growth year over year and 19% growth sequentially. We generated $149 million in international commercial revenue in the first quarter, representing 16% growth year over year, but a 3% sequential decline as a result of continued headwinds in Europe and the revenue catch-up in Q4 that we noted last quarter. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts was $24 million in the quarter. We anticipate second quarter 2024 revenue from these customers to decline to between $7 to $9 million compared to $19 million in the second quarter of 2023. We continue to anticipate 2024 revenue from these customers to be approximately 2% of full year revenue. Shifting to our government segment. First quarter government revenue grew 16% year over year and 3% sequentially to $335 million. First quarter U.S. government revenue grew 12% year over year and 8% sequentially to $257 million. As Ryan noted, we're excited to be the sole prime contractor under the Titan program and will continue pursuing other defense opportunities. We believe we're well positioned to see growth in our U.S. government business over the course of 2024. First quarter international government revenue grew 33% year over year and declined 9% sequentially to $79 million as a result of the revenue catch-up in Q4 that we noted last quarter and continued headwinds in Europe. First quarter TCV booked was $904 million, up 128% year over year. Net dollar retention was 111%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the first quarter with $4.1 billion in total remaining deal value, an increase of 22% year over year and 6% sequentially, and $1.3 billion in remaining performance obligations, an increase of 39% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense, adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $226 million, representing an adjusted operating margin of 36% and marking the sixth consecutive quarter of expanding adjusted operating margins. Q1 adjusted expense was $408 million, up 2% sequentially and 2% year over year. Turning to the balance of the year, given our conviction in the U.S. business, coupled with our margin expansion, we intend to boost investment in resources in the U.S., including in AIP and specific defense opportunities. While we expect expenses to ramp starting in Q2 through the back half of the year, we remain focused on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and GAAP operating income. In the first quarter, we generated GAAP operating income of $81 million, representing a 13% margin, our fifth consecutive quarter of GAAP operating income and fourth consecutive quarter of expanding GAAP operating margins. We generated first quarter GAAP net income of $106 million, representing a 17% margin, our sixth consecutive quarter of GAAP profitability. First quarter adjusted earnings per share was 8 cents and GAAP earnings per share was 4 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 57% in the first quarter, a 3-point increase to our Rule of 40 score from the prior quarter. We will continue to strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the first quarter, we generated $130 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 20 and 23% respectively. In Q1, we also repurchased approximately 500,000 shares as part of our share repurchase program. As of the end of the quarter, we have approximately $990 million remaining of the original authorization. We ended the quarter with $3.9 billion in cash, cash equivalents, and short-term U.S. Treasury securities. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn. Now turning to our outlook. For Q2 2024, we expect revenue of between $649 and $653 million, and adjusted income from operations of between $209 and $213 million. For full year 2024, we are raising our revenue guidance to between $2.677 and $2.689 billion. We are raising our U.S. commercial revenue guidance to an excess of $661 million, representing a growth rate of at least 45%. We are raising our adjusted income from operations guidance to between $868 and $880 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our Q1 earnings. I think it is fair to say we crushed Q1 in the US. We are on fire. You see this in our rule of 7, rule of 40 being 57. You see it in the 68% growth in US commercial. If you do apples to apples, following on 70% growth last quarter, or 71% if you do apples to apples, taking out SPAC revenue. You see it in the deal growth in the US, growing from 70 to 136 in a year. You see it in the general enthusiasm around our products, especially in commercial, but also in government, which has begun to reaccelerate. You see it in general in our customer growth in US Com, which grew 69%. And again, we are growing these numbers while maintaining a rule of 40 score of 57, which basically means we're doing the impossible. We are growing the company while investing in our core IP or our software development. We are winning in the US. And then that kind of then leads to the question of why are we doing so well in the United States of America? And the main reason is we built software infrastructure that allows enterprises, both commercial and government, to move beyond chat, move beyond self-pleasuring, to actually produce things that are valuable. And whether this is tasking satellites in the commercial context, or changing margins, or changing American workers into Japanese engineers using our software platform and large language models. I believe we are the only company in America, the only really relevant market that will allow you to do useful things with large language models. And that is what's generating 68% growth in US Com, again, with a nascent sales force, doing it in a way that is not kind of playbook specific, thin technology, it barely works, and you have a sales force, but with 10 years of IP that presupposed LLMs before LLMs existed. You see the same thing in the government. Shyam and others will talk about it, but our mission footprint, whether it's in Ukraine, Israel, or in the United States government, is stunning. There is basically no conflict in the world that is not that where Western allies are involved and the battlefield's involved and the stakes are life and death, where Palantir is not the first call. And our ability to do this going forward is going to be even stronger because of past investments, and also the unity of our culture and the strength of our leadership, and in general, 20 years of understanding how to do this. It is true that it is mystifying to people, including analysts, how could this possibly be working? But it is working. And this is the 6th quarter of profitability, I dare remind people that there was a time when no one thought we'd be profitable, when no one thought we could crack commercial, where revenue per person was called into question. That also grew roughly 26% year on year. Revenue per person generated at Palantir. We do have headwinds in Europe. 16% of our business in Europe. Europe is gliding towards 0% GDP growth over the next couple of years. That is a problem for us. There is no easy remedy for that. It is also the case, though, that US Com surpassed US European commercial, and we see that as favorable. I, in general, think this is just Palantir's time. Now, there are lots of questions about why we are so active in defending the values of the West. Our belief that the West is a superior way to live, and our ways of organizing around that are the reason why our products are transformative, the reason why we have the best people in the world, the reason why a Palantir degree, as it were, is much more valuable than an Ivy League degree. Before the Ivy Leagues even, embraced the thin, new, woke religion, otherwise viewed as an intellectual cause, but in fact is a way of organizing things so that the greatest institutions of our time disappear and turn into discriminatory dysfunction. Palantir is a counterexample, and I'm super proud of the results. We are going to continue to execute, especially in the US, and I'm very happy to have you on the call.
Thanks, Alex. We'll now turn to questions. We received a few questions from our shareholders about AI and competitiveness. Matthew and Ryan ask, how does your AI strategy differ from your competitors?
Well, we're executing our strategy at an unrelenting pace here. If you go back to the launch of AIP, I discussed how we thought the models were going to commoditize, and that's really borne out. We see that underscored with Llama 3 70B being released now. But the real opportunity for us, as Alex made mention of, is that people are using LLMs incorrectly in the enterprise. And as far as I can tell, we're really the only company to figure it out how to help our customers get beyond chat, leveraging the investments that we've made in ontology, really harnessing this pattern of implementation where you're taking unstructured inputs and turning them into structured actions and outputs that drive economic value in the enterprise. Now, there's this thing that some companies have started saying where only 10% of my customers have data that's even AI ready to begin with. I think that's completely wrong. Maybe they don't have something to sell in the present moment, so they're trying to sell the past. But if that was right, how is it that in a single day boot camp, we're able to add value on top of our customers' messy extant data? Ultimately, software that works. And to the present moment, I'm focused on helping enable builders in the context of the enterprise. I made mention of the DoD hackathon, where a single user built an AIP logic function, surfaced in Gaia Assist, that took a targeting process down from 6 hours to 10 seconds. More generally, in commercial, with Build with AIP, we are releasing a slew of tutorials, quick starts, and reference implementations. They're going to help turn every customer, every user into a builder to unlock the potential of what they can harness on top of AIP. And that's the way ahead, and that's why we're still ahead.
And I would say, I don't believe we have competitors. So I don't believe in the U.S. commercial market we have competition. I don't believe in the U.S. government market we have competition. I think that's the reason Ukraine and Israel bought our product. We are differentiated because in order to actually make AI work, you need an ontology. No one has an ontology. To Shyam's point, you have a lot of people running around saying the data isn't ready. Of course not ready, because they don't have Foundry. If you have Foundry and the ontology, it is ready. If you have Foundry, our ontology and Apollo, you can actually work at the edge. If you don't, you can't. And outside of America, we would still have to convince people of this. Inside of America, we're not really convincing people that we have the only thing that works. We're showing up, we're showing it working, and we're saying this is what it costs, and it's working really well. But I currently, I don't believe we have competition. We have a lot of people who are like the Palantir of Iowa or the Palantir of Harvard or the Palantir of Uruguay, but they're not Palantir. And it's going to take a long time to actually build what we have, because you'd have to actually understand what is special about the software infrastructure of having the combination of Apollo, Foundry, and the ontology. And then you would have to build on top of it so that you can actually do these handoff functions with large language models. And luckily for us, there is not a consensus at the investor level, VC level, or among analysts that we have the only thing that works. And that means there's just going to be very little investment in copying and doing what we do. And investment in what we do outside of America would be hard to do anyway, because the ecosystem, a term I don't particularly like, to get this done is in America. So you would have to do this in Silicon Valley, and Silicon Valley is focused on, to Shyam's point, the wrong things.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thanks. So good, great quarter. My question is, can you just talk about what conversion looks like from boot camps, and maybe just double click on a typical customer? What's now that you have more and more data points, what's that showing you about conversion from a boot camp to actually signing a deal?
Yeah, absolutely. I can talk through that. So we announced boot camps, 2 quarters ago as a go-to-market motion, and we're seeing that play out as you see that in the results. So in 1 to 5 days with the boot camp, we're able to do what used to take 3 months. And we're seeing, as I talked about, we're seeing customers, shortly after boot camp sign 7-figure deals. And we're seeing, the ability to be able to show them what they can do on the platform with real data much more quickly, and then have that monetization conversation much sooner. And so then you see that in the results, 69% growth in customers in US commercial. We closed 136 deals in Q1 this year compared to 70 deals in Q1 last year in US commercial. That's a 94% year over year increase. And so we're seeing, it's still early in the process, and we're seeing the results from the boot camps and seeing that they're working in the monetization from them.
The boot camps also have, quite frankly, another massive advantage, because de facto, it sets a standard that will be very hard for any other company to meet. So even if you don't buy our product, you de facto have locked in an idea of what's possible. And that means that at some point when you go try your own thing and it fails, you've seen, okay, well, I've seen the art of the possible, and therefore I'm going to go buy it from Palantir at some point in the future. The boot camp motion is an early motion, and I don't think we would say we've cracked the sales motion. In fact, I think our 68% or 94% growth on deals or 69% on customer, you have to look at this as we are at the way early days of figuring out how to actually get customers to buy our product. We are good at educating customers on what is the art of the possible, and then some portion of those customers buy it. So I expect as we get better and better at that, our numbers will increase. But it is really early days. We're not flawlessly executing on our sales motion. And I would say I saw this when we built our anti-terror platform. One of the most important things we did is go out and educate the world about how you could fight terror and maintain civil liberties. And most people we actually offered our platform to did not buy the product year one, but by year 5, they'd all bought it. And they bought it because they're like, okay, well, we see how you could integrate data across disparate data sets, maintain a security model, fight terrorism, and be in conformity with the law. And even if you say, oh, I'm going to go try to do this myself, in fact, you can't. And then that sales motion. So the integral, the relevant integral for this is not just what you close in quarter. It's like it is kind of throwing a carpet on the whole market and saying, okay, well, this is the standard. If you can do better than this, buy it yourself, build it yourself, acquire it from other people. And if you can't, come back to us. We're here. And that worked very, very well. I mean, almost every country in the world, not every country, but almost every country in the world that could buy our core anti-terror product at some point did.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So it's also in the line of implementation, but less about the customer, because I think the demand you are seeing is unprecedented, and we can see that you're seeing that on both sides, like from the government side and the commercial side. What I'm really curious about is if you can give us some color around what is next in terms of actually tackling this demand and implementing the efforts and supporting a way larger customer base. What is hiring? What is partnerships? What is next there? And what is the most challenging from your point of view?
Well, I can certainly take that. Maybe Ryan will have some comments on the partnership side and the growth of that ecosystem. But on the product side, this is one of the reasons I'm most excited about Build with AIP and the boot camps that we're running after we have deals with customers. We're really igniting a movement within the customer in terms of unleashing their builders and tackling use cases. There's been a shift. Like, we still love to work on our customers' hardest problems and most important use cases to deliver crushing value very quickly. But concomitant with that is, how do we enable every single one of their builders to get going? And I can think of the most recent, say, 2 quarters, our ability to come in there, help them solve one problem, but ignite hundreds of use cases that they're able to do on their own. So really, even without needing additional partners, leveraging repeatable reference implementations, reference architectures, quick starts, tutorials that get them going again. And across different, we have these for all the industries that we're working in, for all the functions within these customers, and including in government itself.
And on the partnership front, you see, we announced our partnership with Oracle. We're seeing hyperscalers that are realizing that in order to drive compute, you need to move beyond chat, right? You need a solution that's taking organizations beyond their, for their AI strategy beyond chat. We're seeing that happen there, and we're expanding, the partnerships across the space with partners implementing at our customers as well.
So we have across our company for the first time ongoing discussions with hyperscalers that are well known and with others, where we're basically saying, look, we have the ideal product, you have the ideal distribution, you can build on top of our product and then capture your distribution at a higher margin. We are having discussions like this in Japan across UHG, but we have our efforts to provide our core infrastructure to defense tech startups, which are going very well, simultaneously allow us to expand our core architecture, core software development into the DoD, but also make us less competitive with people, which helps us a lot. So a lot of what slows us down is people pretending they're competing with us. So finding ways to build partnerships with those people so they don't compete accelerates our revenue. And in US Comm, it's a lot of what Shyam is saying. It's we are allowing customers to do what we had to do in the past, which is supply Palantir software engineers. There are just not that many Palantirians, so we can't scale. We have to allow other, encourage and provide a platform where they can do it. And I would say what you see both on AIP and on Foundry is de facto customers using our product pretty much on their own. And that's again why that you see a revenue growth up to 26% compared to last year on per person revenue, because we're making more money with the same number of people, roughly. So, and that's precisely because of these things that we're doing. And so that has a lot of benefits for us, both alignment and quality of revenue. That's why you have this that's why we have 57 on the rule of 40. That's why our revenue is growing per person. That's why we can get away with sales that are not perfect. And we're thinking a lot about how to do that.
Thank you. Turning back to a question from our shareholders, a lot of people have noticed that Palantir is pretty outspoken when it comes to geopolitics. How has this been received?
Well, it's a complicated question because I think internally, I mean, there have been people who have disagreed. There have been people who have disagreed to the point where they've left. And this has gone on over the last 20 years. When we refused to walk away from special forces, the U.S. Army, when we took over Maven, when we refused to stop working with Homeland Security, when we had discussions about which countries we'd work with and which countries we wouldn't. More lately, in a more timely version, when we supported Ukraine, it was less controversial. When we sold Israel our software, that was arguably more controversial. The fact that I take, I think the central risk to Palantir and America and the world is a regressive way of thinking that is corrupting and corroding our institutions, that calls itself progressive, but actually, and is called woke, but is actually a form of a thin pagan religion. That is a real danger to our society. And it is a real danger to Palantir if we don't discuss these things. The reason we have by far the best product offering in the world is because we have by far the best alignment around how to build software, what it means to build software, full alignment with our customers, a view that the Western way of living is superior and therefore it should be supported by the best products. People at this table have been in the trenches for over a decade each. Why do they stay? Why do they fight? Why do we come and do these calls? Why are we fighting for individual investors? Why do we actually care about revenue growth in quarter? I mean, honestly, everyone at this table has a lot of money. It's like we care and we fight for these things because we believe we are fighting for a stronger, better, less discriminatory, wealthier, more open, and better society by providing the friends of the West, U.S. industry, U.S. government, our allies, with by far superior products. And that's, by the way, and that's how we align with our customers. By the way, I have customers who disagree with me, but they sure as hell know I'm telling them the truth about what we believe. And probably more importantly, they know we're not sophists. They know we believe in things. And that's why we fight for this culture. And that's why we fight for our products. And that's why our products are growing. Again, you can repeat all these numbers over and over again. How do you get 68% growth in US Comm with a 57 rule of 40? How do you nearly double your customer count, your deal count, your customer count, all these numbers? You do it by having full alignment and the best products in the world. Or you can do it by having weird things that barely work and trying to manipulate clients into buying your product until they realize it barely works because it's thin and of no value. And that's just not how we roll at Palantir. So it has been really, and by the way, the last note, how do we have the best investors in the world, especially individual investors? Why do they stick with us when times were hard? Why do they fight for Palantir? Why do they, every time someone writes something in name, Palantir's gone MAGA, Palantir's doesn't have a product, Palantir doesn't have margins. I'm sure this quarter, Palantir's growth is decelerating despite the fact we're obviously crushing it in America. Palantir is too crazy. Palantir will never be profitable. Palantir can't IPO. Palantir is too weird and odd to produce something that will be disruptive. We knew it was bullshit. The people who out on the front fighting against that BS, fighting against lazy, inept, discriminatory in the sense that is ignorance, people maligning Palantir do it in great part because they believe that we are fighting for them, and we are, and we're fighting for ourselves, and that's why we have such a great company. So thank you.
Thank you. That concludes Q&A for today's call.
Okay. Can you guys hear me?
Yes.
I had to move here because I had to get the battery. All right. Raw thoughts. Let's start off with you, Neil, on that call. What do you think?
I mean, as predicted, right? Not that many analysts asking questions. We got 2 questions, one and none answer a bit, in my opinion. With regards to the bootcamp conversion, I was hoping they could tell us a bit more about that, but they just repeated the numbers we can read ourselves, which, okay, fine. I'll be disappointed there. But overall, it's about, again, explaining what Palantir does. I'm surprised some of the people in the chat were surprised by Alex Karp's speech rant. I mean, it's one of the only tech CEOs, one of the few, let's say, that actually has a spine, that doesn't shy away of saying what he thinks, what the mission is. You have to respect that. If you don't, then Palantir is probably not the company for you, because they do deal with government. That has been the core of the business for quite a while. So yeah, it was more about, again, saying Palantir is crushing it. You can see it in the numbers. Yes, some of the things with commercial are going to take some time, the recognition, etc., etc. But yeah, nothing that would make me sell any shares anytime soon.
Arnie, give me your thoughts. Stock's down about 5%. We heard Karp say a lot of things. What did you feel about the call?
Why should someone sell the stock after these results? Apart from
Arnie, you have a bit of an echo. Do you have 2 mics open? Close one of your mics.
No, you say your audio too loud.
No, mine was muted. Okay, go ahead.
So why should someone sell the stock after these results? Apart from him being greedy before. I think the natural progression of this company is very clear. Like, while previously we had the business risk of, we don't know if the revenues will ever accelerate again. I think now we are evidence of the company not only accelerating, obviously I would love to see more, but putting all the seeds that are needed to keep growing more, while also finding a way to actually grow very efficiently. I particularly liked the fact that Karp underscored many times this idea of a rule of 40, where Palantir now has a rule of 40 score of 57%. And maybe it could be helpful to underscore actually what is that. That is essentially the key metric with which you assess the health, the strength of a SaaS company, so a software business, where the idea is if you grow much, you are even allowed to have like a thin free cash flow margin, because the rule of 40 basically tells the idea is you sum the free cash flow margin and the revenue growth, and the average company in the SaaS world tends to have a rule of 40 of 40%. That's the name, that's where the name comes from. But if you are able to grow more, let's say at 60%, you can even have like a zero free cash flow margin, which is still great. Typically, the combination is 20% growth, 20% free cash flow margin. What Palantir is doing right now is the impossible, also underscored by Karp. Why? Because essentially now they are accelerating, and in a normal stage, in order to accelerate, you need to spend more in marketing, while actually Palantir is spending essentially the same amount of marketing, but the business is accelerating, which means the margins expand, which means this rule of 40 is improving. And what makes me think is, I don't think neither we are at cap level now. I think Palantir can even go beyond by keep leveraging the bootcamps. And from Karp himself, it seems, yes, bootcamps are great. We're doing great, but we are not fully at full power yet. So there was like an awareness of, yes, we have improved much, but we can do much more.
Yeah, especially, I mean, he said there were early days. way early days to get their customers to buy their products. I mean, that's where the partnerships with the hyperscalers comes in, maybe a bigger sales force. Revenue per person was up 20%, which again is great. All of those metrics are great, but I mean, at the end of the day, you do want your salespeople to sell the products. Over time, we know it takes time with Palantir. We've known that for quite a while, even though some of these cycles have become extremely fast. I mean, 7-figure deal after 5 days, quite fast. But of course, specific deals, you want this to be on a larger scale.
I think it is very important what Karp mentioned about educating the market. Since all the market now is focused on AI models, and Palantir is not providing AI models, it's providing infrastructure, I think there is a little bit of skepticism, because they're essentially selling something that is more useful, but is different from what is generally perceived to be useful. So Karp mentioned all these bootcamps, even for clients that maybe don't fully convert immediately, at least they set the standard. And Palantir wants to set the standard to be the standard for this market. Around the government side, he mentioned something that was really important in my opinion. Initially, they did the same process. They had a valuable product. They needed to educate the market. They spend a lot of time showing what they are being able to do. And it took like 5 years before all the potential customers that could have purchased the product actually did it. So let's say now we have made more than 900 bootcamps, they said in the slide. We are at 400 clients more or so. So it's like there are still a lot of customers that just tried the bootcamp. They will try to find a way to make something on their own, but eventually these clients will come back.
Yeah, I agree. Chris, I see you in the chat. I'm just going to give my thoughts real quick on earnings. Then we'll have Chris join live. He couldn't join right before the call, guys, because we were like 5 minutes before the call, but he's going to be sitting with us and giving his thoughts on earnings as well. So my quick thoughts. It was really interesting. I think as soon as the call started, Karp, it was almost kind of like he saw the stock, right? Like someone showed him the stock right before he went live, and he was a little flabbergasted. And I think there was like a visible kind of like gasp that he had, and he was like, well, we crushed it again. But it was kind of like, well, I don't know why the stock's not reflecting it, but we crushed it. And I think people have to remember, Karp is a founder before he's a CEO, which is why even at the end, he was raw and honest and said, look, I have money. Everyone at the table has money. We're not just doing this for money. We're doing this because we genuinely believe in the purpose and belief in the mission. Shyam Sankar, the CTO of Palantir, was their first forward deployed engineer. Alex Karp convinced him to join the company at a French restaurant by painting him some analogy of how the restaurant operates and how everything has a symbiotic relationship. What if that could happen in a tech company? And that's how these guys ended up working together. So for them, it's a monumental achievement. And I think it's just something we have to recognize as, from their perspective in terms of how they're thinking about earnings. I see a lot of comments here, people saying, Palantir cold to this, that, you're trying to make excuses for the numbers. I really struggle to have sympathy for those arguments. I think a lot of those arguments or those comments are rooted in ignorance, because at the end of the day, I'm not seeing numbers that are showing me a de-acceleration of growth. In fact, I'm seeing the opposite. And I'm not seeing numbers that tells me, oh my God, this company is overhyped, they're overselling themselves. Even the analysts, Mariana and Dan Ives, two very well-respected analysts in the community, they started off their questions by saying, hey, we can see you guys have a ton of demand. We want to know how you're capitalizing on the demand, but it's very obvious that there is interest for the company itself. So I think that makes a lot of sense. And I think Karp had a really good monologue in terms of what they're trying to do to capitalize when it comes to AI. The one thing I will say is Dan Ives asked a very specific question, which was, can you tell us a little bit about the conversion on the customer account? I don't think, and this is, you guys just got to understand the politics and psychology of companies. Karp's not going to say, oh, we're converting 10%. We're converting 20%. We're converting 30%. Like, they can't give away that number. That number is a very private number to them. That number probably is adjusting every single day. So I know a lot of people in the chat were saying he dodged the question. Yes, they definitely dodged the question. They didn't give the exact number, but there's not many companies in the world that are going to give you the exact number on their exact conversion, right? To be able to make their numbers. However, the 69% customer count growth in commercial is at least a byproduct of the overall demand growing when it comes to the US commercial space. And so I think that demand is getting higher and higher. The conversion is getting better. Karp even acknowledged, yeah, our sales motion is not the best, but we are capitalizing on the demand that's coming in. And once we really accelerate our sales motion and really get that working correctly, then that conversion is probably going to get closer to 30, 35%. I would guess right now it's close to 10%, given they added 50 customers. They did 500 boot camps, right? So that's my basic kind of rough guess on Palantir. All right. Chris is with us as well. Chris, thank you for being here. You are here now live with us. What were your thoughts on earnings?
So first and foremost, I just want to say, I thought earnings were okay. I mean, I think a lot of times expectations, they get a little ridden too hard. Right now, your guy, what is it down? Like 3-4%. You're up 8% on the day, 40% in like year to date. Like, what do you want? You know?
I agree.
So people really have to recalibrate themselves a little bit. And the thing is, like, when you bring this up, people are like, oh, you're just a trader. Like, no, it's not about being a trader. It's about realizing that sometimes the market overvalues things in the short term, right? And that doesn't mean that the long-term thesis is broken by any means. It just means in the short term, things have just got really, really heated in a very short period of time, and that you should be, you know, a little bit more cautious. So I think overall, the company is doing very well. Long-term growth trajectory is now moderating, but that's healthy. That's how things are supposed to work, where you can't have year over year 100% growth every single year. That's just impossible to do. So you have to take that into consideration. And what's good that I like about these earnings that maybe some people don't like is that rule of 40. If you go to that slide that showed the rule of 40, that is what a healthy company does.
Can you explain that for people? What is the rule of 40 for those?
Right. So you're supposed to take the growth rate and I think the operating margins, and it's supposed to stay over 40%. That's what dictates a healthy SaaS company over a long period of time. So if you see those metrics starting to not to drop off, then you got a problem, right? This company is clearly performing in the right way. So that means that it deserves a premium valuation, just maybe not the biggest premium that you can possibly have. So I think right now Palantir is in a good shape long term. People are going to do very well in this stock, especially if your time horizon is over 5, maybe 10 years. But the one thing I will say is the phase of hyper growth is over for Palantir. So if you go back to its quarter over quarter and year over year numbers, you can see that now growth is moderating at about 20% per year, which is good. Don't like that. People have to realize 20% year over year growth, and you can compound at that gives you amazing returns, you know, growth rate plus profit margins. Yep. So I think overall, people really need to stop being really super bearish on the company. You could be bearish on the stock price. I mean, that's more normal than people want to believe, but that's what happens. Sometimes the value of a company rides way higher, like the stock price rides way higher than the company. But I think the fundamentals are really strong. Would I buy Palantir at today's prices? No. I have
Why?
Because the valuation doesn't make sense. It's too high, man. Like your growth is slowing down, and the sentiment right now is too strong, which means that the expectations are a lot more elevated. You typically want to, you know, this is where I get a little bit frustrated when it comes to investors, where they completely forget the one cardinal rule that everyone needs to remember, and that is very simple: buy when there's fear, right? Sell when there's greed.
Yep.
Clearly, we are in a moment of greed right now, and earnings basically didn't come up as good as everyone wanted. So now everything is getting sold off. It's like stupid, really. So the key is wait for people to get really bearish. Wait people to say, you know what, this company's not growing anymore. Fuck this. Alice Karp's an asshole, blah, blah. Then you buy the stock. And then when people say, oh my God, Palantir can do no wrong, and everyone just is going to be using Palantir, and this is going to be a $5 trillion company by 2030, that's when you should probably sell, because every idiot and their mother is just pumping the stock.
Or at least not buy aggressively, right? If you're long-term, maybe you don't sell,
Yeah.
but you definitely don't, you know, at 25.50 today or whatever it was, maybe you don't load the boat.
I mean, dude, this is like, this is like TJ's wet dream, bro. This stock is easily one of the best companies to trade in the market right now because it has such a big retail following that bids prices up and then sells things off without any idea of what's actually happening, and basically gives you these crazy premiums on either side of the equation. So I would say to people, the best way to make money on Palantir, if you want to buy just the stock and hold it for long term, you're going to do absolutely fine. I don't doubt that for 1 second. But if you really want to juice up your returns, bro, trade the shit out of the stock. Sell calls,
there's a lot of money in option selling.
sell calls, sell puts, manufacture.
Chris, what are your thoughts on this customer count? How do you feel about this slide right here?
I mean, eventually it's going to slow down, right? It's hard to keep adding customers because there's still a limited number of companies that you can tap. The other thing is, when it comes to IT spend is going up, which probably means that there's something I don't want to say something wrong with their sales process or wrong with the product, but adoption rate maybe slowing down is probably something that that's not good. And this is something that Carp brought up on the call, which kind of intrigued me a little bit because, if the product is really good, it's like a restaurant, right? If it's a great restaurant, there's going to be a lot of line. There's going to be a huge line outside. So if you see a restaurant and there's not a lot of line outside, that doesn't mean that it's not a good restaurant. It just means that maybe the demand is not as high as it is. Now, in the future, these boot camps could provide tangible value by having returning customers who will go out there and explore things. There may be something to say about the price point of Palantir being a little too high for what some companies are willing to pay for it, and saying, you know what, we understand that this is a really good product, but the amount of money that you guys are trying to charge is a little bit too high. And I mean, if you look at Palantir's margins, the margins are freaking amazing, which means that they're probably like not really giving a lot of discounts to people. So, they're no longer in the phase where they're sacrificing margins for growth, and that could be slowing down customer adoption. Now, that's kind of the opposite of what Snowflake is doing, where I think they're a bit more, generous with their terms and saying, hey, listen, we want to get you on board. So these are the kinds of business decisions that are being made in the background that, we don't really have too much privy to. But overall, I think the trajectory for Palantir is a good one. I do see some underperformance for the rest of the year because of this light guidance, which means that I don't doubt this company getting back to the 20s, maybe even the high teens. But yeah, I mean, dude, everyone's gonna have downgrades the next week. You're gonna see downgrades for Palantir. That's it. Because the thing is, like, they guided for lower revenue than what the market was forecasting, and so once you see those downgrades, some people may take a step back, and we'll see what happens there.
All right. Any other thoughts, Chris? And then we'll get back to it. Anything else you want to say? I'll put Chris's Twitter. For those that don't follow Chris, he's a good friend of mine. He's analyzed Palantir for years now, and he understands the company pretty well. So I'll put his Twitter in the description. Any final thoughts you want to say, Chris, on Palantir?
Yeah, congratulations to my HIMS boys, bro. I bought a crap ton of calls this morning.
Good.
HIMS was over. The problem is, this is the one thing I just want to reiterate. Earnings are meant for traders, not really investors. And the reason why I say that is because nothing in earnings is fundamentally going to change the course of a company that directionally to basically decide whether or not the company should be valued 10 or 20% higher or 10 or 20% lower.
Yep.
So the thing is, if you're think of earnings as a report card. It doesn't mean like if you get a report card, you should be like, oh, you know what? You got a bad score in the third grade. That's it. You shouldn't even go to fucking fourth grade anymore. You should just, that's it, quit life and find a factory job. I think so many people do that, and it's retarded. It's like, look, I just got a bad test score in math in the third grade. Give me a break. I'll do better next year. So just think of it that way. So I think a lot of these earnings reports, I'm becoming a lot less concerned with earnings, more concerned with, okay, what is the report card, and like where are the improvements that need to be made, and what kind of responses is the CEO getting and how are they dealing with some of the macro level impacts, and then seeing where things go from there. So earnings right now, I personally am not a big fan of doing short-term options up and down. I'm more of like, hey, I think this company's headed in the right direction, buy some leaps, call it a day. And that's the way that I would approach it.
I love it. Thank you, Chris. Chris's Twitter is in the chat. Please make sure to follow him. And Chris also has a Patreon. You guys can check out his Patreon as well. A lot of good value there. And Chris, I will talk to you later in the week on Finance Junkies about Palantir.
Sounds good. Take care, guys.
Thanks, Chris. Arnie, go ahead.
Well, I think Chris brought many interesting points. I generally agree with the idea of you should better, like if you're focused too much on earnings, you'd better trade it rather than investing in it. But because the priorities change, like for a trader, it is important to have like the big spike in relatively little. For investors, what really matters is the fundamental direction of the company actually improving. So each earnings call is like a check where we say, okay, is the thesis going stronger each quarter or not? And I think I'm confidently say that this quarter we have further evidence that our thesis is right. But there is one thing that I really disagree with Chris on, which is from Chris' perspective, everything seems to be already at the top at a fundamental level. He expects customers to decline in terms of acquisition. Probably over the or year-on-year comparison, it could be even true. Yet I think it doesn't really capture what is happening right now. Palantir is generating more or less $2 billion annual revenue with so few customers. And just now, they're learning how to capture more customers, and we have evidence of them capturing more and more customers, which could potentially improve a lot still. And now we are at 500 customers, more or less. And Either Square was showing me that there are like $6 million employer firms in the United States.
Only in the US. And he said that you can only grow so much in a period of time. I mean, 500 something companies is not near the top, of course. I mean,
obviously,
this wants to capture everything.
So this is obviously the biggest numbers out there, considering also mom shops. But just for our reference, companies like Snowflake, ServiceNow, they have like 5,000 clients, and Palantir has like 1/10. So, and Palantir is now learning how to capture clients. So I think we are actually at the beginning of the tornado, not at the end of it.
Agreed. I mean, I can understand the comments on the stock, and Chris was perfectly correct on that. Stock ran ahead of itself. Market will not buy things that are overly expensive anymore. This isn't 2020, so you have to respect that. Even with all of that, the stock is still up 40% year to date. So enjoy that. Then, with regards to the customers, he did put the analogy of the good restaurants, right? I think Palantir is the good restaurant. I think there is plenty of people inside the restaurant, just not enough people serving the good food. I think we're going to see that in the future with regards to the growth in customers. I mean, right now, what is it? We had 900 boot camps, 500 customers only, 600?
Yeah.
600 boot camps, and right now only 500 customers. So, I mean, I don't think the top is even close. But again, sales needs to happen. They need to close more deals. We need more information, etc., etc. But overall, I mean, thesis is intact. 20% at minimum growth is quite good, in my opinion, especially at these profitability levels. So, yeah.
Yeah, dude, if this thing drops to 21 or below 20, I'm buying more. Like, it's just like, this would be none of adjusted operating margin increase. U.S. commercial customer count expands, or growth expands. Customer count in general, 44% year. Like, I don't see the numbers that are bad. I'm trying to be very objective here and try to see why the stock is down. And here's the simple answer. And anyone let me know in the chat if they disagree with this analysis. Stock was up 45% year to date as of today, 8% on the day. It's just like, unless you are NVIDIA and you just have the data center revenue that's like going to just keep going on forever, you're not going to pump on that. It's going to be very difficult to pump when you're up 45% year to date. Palantir increased their market cap by almost 50% this year. They added $20 billion. Like, it's hard to add more and more dollars there. It's a market. There's going to be liquidity. People are going to take profits. So I don't think the numbers justified a 10, 20% run, because we already had basically a 50% run and a 10% run on the day. And I wouldn't be surprised if in the next coming days, just like Coinbase fell 5% after they went up 10% on earnings, and then Coinbase pumped up to 234 today, which is basically like a 6% pump from where they were on earnings. I wouldn't be surprised if we see Palantir back at $25 in a couple of days or at 21. But the numbers themselves, I think, were pretty strong. CrowdStrap says guidance is the reason. I agree with CrowdStrap as well. And this is where we have to ask ourselves, do we think that guidance will continue to expand? Because, I mean, look, in Q1, you're not supposed to say, yeah, guys, we're going to grow by 7 percentage points more than what we told you. A, because Palantir probably doesn't have the data to say they can do that. Or B, they just aren't growing that much. So in the coming quarters, do we think that's going to happen? If you think that is, then, you know, for a stock that's already up 40% year to date, they can increase the guidance. If not, it is still up 40% year to date, and it just won't go up any higher than that. Maybe it goes to 25% year to date and drops another 15%, but it's still going to have a pretty strong year to date return. Just a question of if that guidance can increase. Arnie, go ahead. Or Neil, then Arnie. Go ahead, Neil.
Yeah, and I did say that Q1 is a seasonally weaker quarter, and still they crushed it. Plus, again, it's an election year, so even though we see government reaccelerating, it's an election year. I do expect the government side of things to get quite a big push, maybe towards the back half of this year, next year for sure. So don't forget about that. Plus, I mean, it's a very, very quick earnings call, right? Only 2 analysts to ask questions. Other software companies have plenty of other analysts asking questions. So now we're just waiting for another 3 months until we get more information, plus all the great information everybody finds and shares on X. But yeah, just don't look at the stock, because let's face it, a stock like this, a company like this, it's a $50+ billion company, generates just under $3 billion in revenue each year. It is expensive. Plus, why do you want the stock to go up so much right now? Do you plan on selling tomorrow? No.
That's a good thing. I'm happy you said that, dude. If the thing went to $30 tomorrow, some of the people that consider them long-term investors might get really short-term to take some of those profits. And, you know, that doesn't give you enough time to build out a position. And if you want to build out a position over the next 10 years, then you kind of need the stock to be a little bit lower. Arnie, go ahead.
No, I was just noticing that every time they give a guidance, typically they beat that guidance by 1-2%. And actually they beat the guidance they gave for around 4%. And they guided actually something better still, like in the 22% year-on-year range, which is disappointing maybe compared with the price implications, but that was already above what everybody was expecting. And analysts were expecting and are still expecting for the coming years a revenue growth of 20%. So what we are seeing here from an analyst perspective is maybe the guidance is not extraordinary, is not that guidance like NVIDIA, but if analysts were already starting to appreciate more the Palantir story, as a reminder, there were 2 analysts, so Citigroup and Jefferies, who were very bearish, and entering the last quarter, they essentially moved their target price from the $12, $13 range to 23, 24 after Q1. After this Q1, they have further evidence of revenue accelerating, margins expanding, which actually back those numbers. Probably the numbers are good, not good enough now to make a further jump. So probably we just need to digest a little bit more to have further confirmations to say, okay, now we are ready to go and strike to 30. Because also for the $15 to $20 range, it was a process. It took like 6 months of the company growing into the valuation until they were like enough substance with which, when the numbers were out, wow, these numbers are actually too strong compared with the valuation I'm paying. Now the valuation is very rich, the numbers are very rich, are very strong, so there is no real discrepancy. So it is reasonable if the stock stays in this range. Now, if you are an institutional investor investing in AI, why should you sell the stock now?
It's a hell of a question, right? If you're an institution, I actually just had an institutional fund manager. He manages, I think, 50 to 60 million bucks. He just texted me and he was like, "This is a great quarter to me." This is a guy managing a decent amount of money. He's like, "I think this is a good quarter. I don't know what people are freaking out about," right? And so I would imagine the toots that want to fill up their positions, I think they would. I mean, it would be magic for them if this thing goes below 20. I really think they would want this thing to go below 20. And I don't know if it gets there. It's down 8% right now, but we'll see. I don't think there's a big reason to sell if you're an institution like that. And that's a really good point, right? If you're an institution, you're unemotional, right? You're not like, well, I'm going to give the company a chance. It's like, no, if something's wrong, you're out, right? You don't care, right? We see this with Tesla, right? Like it's just not working. All right, we get out of here. And that gives retail the advantage, right? I don't know if you're an institutional money manager, what are you seeing outside of guidance? Not going down, just not going as up as you wanted for you to be like, yep, I'm out. Palantir is a busted story.
I mean, at worst, you are less excited, but I don't see anything that could potentially break the thesis. While 2 years ago, every earnings call were like, oh, we are so close to get something really bad. Like, okay, the thesis on this company is not working. I think we have plenty of evidence that the thesis is really working, especially in terms of the client acquisition side. It's just probably not we. Like I think the overall price was implying more, because our expectations are, yes, there will be like a gradual acceleration toward the 30%. I think it is absolutely possible once the US commercial starts having a lot of weight. And I personally don't think we will really see a deceleration with scale, but we will actually see a moment of very strong acceleration in customers and revenue, which is like when you enter the scaling phase, because you are appreciated as a standard. And that's it.
We got TJ in the chat. Only people who are mad are short-term call option buyers. Dude, me and Arnie, I'm not gonna lie, we were on the market open together, and the thing pumped 8%, and we were like, dude, if you got some options expiring next week, get out of those shit, because it's just hard to hold these things going into earnings, right? It's very difficult. If you're doing that as a gamble for a couple $100, whatever, but if you got some sizable money on short-term call options, it's literally putting it on black or red, right? And if the stock pumps in the morning, it gives you the pump you're looking for, you might have to get out of it. JL says the stock ran up before earnings. Of course it would sell today. Relax, people. Yeah, I agree, dude. I think that's the case. Neil, go ahead.
Yeah, no, I mean, if nobody here was looking at the stock price and they would only listen to our conversation right now, they would think they missed completely. Everything is down. They're losing customers. It's not a profitable quarter. There is no buybacks. I mean, it's a complete shit show. Excuse my French, but it's not. It's a very good quarter. Just the stock has run up too fast, and that's about it. The expectations from analysts were 20% year-over-year growth. Now you're getting 21, 22%. Ooh. Ma che cazzo fai?
Oh boy. Yeah, I agree.
Well said.
Thank you, brother.
All right. I think we ended off just with a little word about the community, as we always do. This is a very fun thing to do every 90 days. Very exciting. I think we had 6,300 people here at the peak. So means the world, you guys spending time with us. Look, as retail investors, first of all, one thing I will say, Arnie and I, I've been seeing this a little bit more. It's like retail investors are starting to get a lot more respect because of the analysis they can put out. And I think these companies nowadays, whether it's a Palantir or a Robinhood or these kind of B2C, not B2C companies, but companies that have either B2C products or a big retail investor base, they recognize that the days of just selling to JP Morgan and Bank of America are gone. Like, people want to know your story, and to amplify your story, you need to have an audience that's engaged. And to get an audience that's engaged is very difficult. And, sometimes retail investors are a little bit more creative with how they get people to care about ideas, thoughts, and opinions and analysis. So we just really thank everyone for showing up to this call, because it's not easy to have people in one place and care about our thoughts and opinions and our ideas. But I think a lot of people hopefully get some value out of it. And today was one of those earnings where the stock fell after being up heavily. But I'm sure there will be many earnings in the future where we will keep doing analysis, and hopefully the stock will reflect that. Neil, your thoughts on being a retail investor and being along for this journey?
Yeah, I mean, I wanted to share the example Tesla, for example, huge company right now. Also started off huge retail backing, retail site coming from miles and miles away. Wall Street didn't get the story, probably still doesn't get the story really right now. And you get rewarded in the long run. I mean, okay, I got a bit lucky with Tesla though. When I got in 2019, stock went up like crazy. Okay, fine, we got a pandemic. I'd rather not have a pandemic and not get a 10x. But I mean, even before, if you started earlier, it was red. Company went almost bankrupt. But you kept on looking at the company. You kept on looking at the story. Story became better and better. Financial better and better. Then suddenly you're probably a millionaire if you bought back in the early 2020s, 2012, 13. With Palantir, we've been discussing this company when it was high, when it was extremely low. Everybody was bearish, slow growth, etc., etc. Now look at us. We're at $25. Stock was not that long ago in a stock market cycle under $10, under $8. As a retail, it's true, you get way more respect today because one, we retail investors don't really have to show our performance each and every quarter to our clients. We don't get paid by anyone, even though a lot of money managers lose money and they still get paid because they spend time on X. But okay, it's a story for another day. But I mean, we have time to research companies. We have time to get our feet wet. And yeah, with Palantir, again, it's stock ran up maybe a bit too fast, but everything else is doing quite well. Plus, if you are a long-term investor, you should enjoy great quarters. Stock goes down. If you're a short-term / trader, I can understand why you wanted this to go up so you can get your quick gains. That's also totally 100% fine.
Stock's down about 9% right now. Arnie, your thoughts as being on being a retail investor, part of this community?
Well, I think being a retail investor is the condition to actually learn how to invest. I think the really good investors out there are not the ones that started in managing money immediately, getting fees, but are those who started investing because they were truly passionate about what they were doing and they managed money only as a way to leverage more what they do, their passion. But eventually there are a lot of people who, as you mentioned, just talk on X and deliver nothing. So far, I would say at least this community has really brought evidence that we are able to search for valuable information that is more or less hidden, but valuable, digest it, share it in an effective way. And we were right versus very big horde of experts, both from the technical side, on the software side, and on the financial market side. So our dear retail investors, humble retail investors, actually made it right. And I think we will continue to make it right because now, differently from who starts studying the company now, our knowledge compounds. It's like an ontology that continues feeding itself with more information. And the better the ontology, the better the predictive outcomes become. So sometimes we can be right, sometimes can be wrong, and sometimes we can have no idea. Like like this morning, like why plus 8%? Well, this is just expectation. What we can do is trying to stay balanced, enjoying the journey, and more importantly, rather than seeking to make money, I would say you're learning to avoid making stupid decisions.
Yeah, and just to go Ether, yeah, you say something too. Yeah.
Thanks. I mean, I really resonated with what Neil said about the Tesla thing because I began my journey investing with Tesla also, and it was quite a fun ride, and it was full of complications and interesting stories, Elon tweeting and the stock like the stock dropping. So and then I found Palantir, and here I am. So it's been an interesting journey here with this amazing community. I mean, we've met incredible people here.
Physically also.
Yeah, physically. I mean, we've met more than once, and we've done trips, and we've moved, and we met other incredible people that will never appear here on the screen. But this just goes to show that Palantir is an amazing company, an amazing community, and that no matter how a quarter, no matter how the stock drops or goes up after a quarter, I mean, we are here and we'll be here and we'll be more next quarter. So we'll be happy and merry, and that's it. Because they keep executing.
One thing to give a little bit of context of how deep the retail investing community is. Well, I just want to share this right here. This is some people in the chat might not even know this. Palantir got $37 million from the government of Lithuania. This was back on, when was it? This was March 26, 2024. So this was probably a Q1 deal. I think it goes into effect by Q4, Q3. I mean, dude, this deal I was able to tweet because a guy who lives in Lithuania messages me on Facebook. I don't really check Facebook. I get a little ding from Messenger. I'm like, who the hell is messaging me on Facebook? This guy's like, hey, I'm from Lithuania. I like your content. Check this link out. I clicked this link. Thank God it was not, any random virus. It's a link to Palantir, and going through their central public procurement portal, they got $37 million. This was not announced on PR. This was not on the Bloomberg terminal. I mean, this is the edge that retail investors have, I think, because we're crowdsourcing so much information and we're trying to figure out what's actually happening to this company. So when we see the government reacceleration up 16% versus 11% last quarter, part of that is because we're winning some of these deals. It's a small contract, but it's still a contract from a European, from a country across the world, right? The country that's part of the Baltic states. That's what's so exciting about being a retail investor, is just the crowdsourcing of information. And then Palantir does a great job being one of the most exciting companies in the world. As Ether says, as long as they keep executing, this is going to be a really fun journey over the next decade. All right, I think we're out. Thank you, everybody, for joining. Everyone's Twitters are in the description. Please make sure to check them out. Like and subscribe if you can. It would mean the world. And I'll be back later this week on this channel. I'll do a market open for the next few days, and we'll be back in 90 days in probably August for Palantir's Q2 2024 earnings as well.
Almost there.
Almost there. Just 89 days to go. Love you, everybody. Thank you for being here. We'll see you guys later. Bye, everyone. Have a good one. Good night.
Ciao.